Another price target change for Nvidia, now Bank of America, raising the price objective to $275 from $235. We have also posted the Bank of Canada rate statement on the feed for those interested.
All right, good morning,
Brings us now
everybody.
10 minutes away from the top of the hour, where we get the US pending home sales change month over month. Forecast 1.35% on the prior 4%.
Okay,
The index
let's do
saw a
this. Good
prior rate
morning,
of
Lynette.
74.7.
Good morning, Mango. Good morning, Jonathan.
Canada's
Good morning,
2-year
Chahan.
yield is a 5.2 basis points
Today's
up
going
now
to be an
to
interesting day.
2.406% following the Bank of Canada rate decision.
Good morning. It's going to be a fun day, guys. It's actually going to be a pretty fun day. So, good morning, Finance with Diego. Today's going to be a fun day. I'm sniffing up some high volatility. Right now, the NASDAQ has been kind of whipsawing. Nvidia pretty much gapped up today. 5% up. Insane moves. Like we're seeing we're seeing this crazy battle at open here. Just it's not even a big range either. It's 40 points of range. Very jumpy back and forth with opening volume. A lot of uncertainty, a little bit of a battle. But yeah, kind of interesting. Definitely excited to see what today brings. I don't know if you would call it hedging, but I am trying to short gold and NASDAQ. Both. Both of these did run up overnight. I did talk about looking at a potential gold short last night. But, you know, watching it for a little bit, seeing the, where was it? Oh yeah, it was over here. Let's go to the 15-minute chart. So, we had the little rally up. Where was it? This was yesterday during the day. So, when after hours opened, we had this really fast liquidity sweep, instant bounce, but it was showing some weakness, I thought. But it did rally through, consolidate a little bit, and last night rallied for gold. So possible that gold maybe finds strength here, but I think it might consolidate, come down to maybe the 4K level, maybe a little closer to 4K, and that's going to be the deciding factor of if gold decides to change trend. So far as right now, gold is like at its make it or break it for continuing the trend. So if I go over here to our graph, I've been kind of just watching the moving averages here for this downtrend. This was like a pretty big sell-off, so it makes sense for a bounce to come in. And this previous area of support here would have to become resistance if we want to see this continue selling off. So it did come up to the 4-hour 21 EMA here. It did come up to these levels where previous support was fairly strong before. This is the spot where I would want to see gold reject. And yeah, the NASDAQ's just kind of ripping. I took a cash position short as well on it, and I'm gonna hold it into FOMC, because I think even if we're nice and bullish, I think FOMC will bring in some volatility, so we might be able to get some easy quick trades. Well, we'll see what happens. I think it might just be a hurry up and wait. We'll wait and see until FOMC. I think that's probably what's gonna happen. Okay, I'm gonna take a look at stocks real quick.
In 5 minutes time now, at the top of the hour, we get the US pending home sales change month over month for September. Forecast 1.35% on the prior 4%, and the index saw a prior read of 74.7.
Okay, so apparently Nvidia hit $5 trillion market cap. If you guys aren't aware, pretty insane. Pretty insane that we got a first $5 trillion company. It's Nvidia, which used to be a video game video card, or a gaming video card company. And now it's the most expensive company in the world, which is nuts. So Nvidia gapped up about 5%. It's pulling back now. Broadcom has rallied a bit. Netflix opened up pretty much flat right now. Meta's selling off just a little bit, but not really showing much bearish or bullish movement as of right now. Apple is trending up, continuing to make all-time highs. Okay. Amazon opened up pre-market pretty high up there and selling off again, but Amazon has been bullish. It is getting close to a spot where it potentially tests the trend. If it breaks down, it could be nice downside. Okay, Oracle selling off right now. Tesla
S&P 500 extending gains up.
opened up
4% now.
high, gapped up, sold off a little bit, bounced right back up, so it seems to be in positive gamma. Google kind of sitting flat, sort of, and Microsoft selling off a little bit. Okay, so that's where it's at. And this really big jump in the NASDAQ is actually from
target to
Nvidia.
$320 from 270.
So Nvidia just made a big push just now. Big push, but it's not broken to all-time highs yet. Okay. So we had... Oh, I always thought BOC was Bank of China. That's Bank of Canada. Okay, so Bank of Canada, they did a quarter point cut on their rate decision. And then in 3 minutes we have pending homes index and pending home sales. So in 2 minutes now, that's gonna show. Okay. Fun stuff, fun stuff. $15-minute orb TP1 hit pretty dang quick. Also saw a little bit of a breakout signal, and that already basically hit its average move. Could move like 10 more points higher for the average move to complete. That's a successful breakout signal hit. Play range today until FOMC. Yeah, that's pretty much the
1 minute
idea.
remaining. I'll lead with the pending home sales change month over month.
But as of right now, I think everything is priced to absolute perfection. So I think any misspeaks or anything like that at FOMC are going to be very easily selling off the NASDAQ. Good morning, trading pennies. We sold a call on NDX 26.5, 26.6, okay, for $1 times 10. Okay, good luck, good luck. Mango 40.23 short gold, 2 minis. Okay, good luck. Yeah, I'm shorting both. We could see both rally, so it could be a bit risky. We definitely could see both rally.
0%, that's flat at 0, which is lower than forecast 1.2%.
Order filled.
The index at 74.8, 74.8. Noting a prior revision to pending home sales change, revised up to 4.2% from 4%.
Very, very strong trend. So yeah, my idea for this short is that, like, legitimately everything is priced to perfection. Everything's baked in for perfection. So I think, like, even if FOMC, like, everything regular is stated, I would think there's going to be a pretty good sell-off. At least for, not like bearish sell-off, but at least for, what's it called? Sorry, I just woke up. At least for retracement. Okay. Q versus SPY ratio is getting pretty nasty as well.
We have posted the pending home sales change report for September on the feed for those interested.
Okay. Yeah, and as for that gap up that we saw, how many days ago is that now? Is that Monday? Yeah, that Monday gap up or Sunday gap up. As far as like filling that, I don't know if that's going to be possible today, but, well, not possible. I don't know if that will be probable today. It definitely is possible. Any type of crazy thing like a rate hike, any type of stuff the Fed says pertaining to, you know, the economy not looking hot. Maybe them not cutting or, you know, hiking rates or anything like that. We could see a gap fill today. I guess it is possible. I wouldn't bet on it though.
Bank of America raises the
I
price
would
target
think
of
that
Tesla
even
to
if
$471 from
everything good is
$341.
said, I would think that we get some good retracement. I would think possible retracement to even 26K. And that's kind of what my target would be about 26K, maybe a little short of that. 26,050 possibly. So I got partials down to that. But yeah, I would think we'd see some volatility with FOMC. The 26K would basically be yesterday's lows. So it's not really out of the realm of possibilities. Overnight, we legitimately gapped up how much? 100 points overnight. So we even saw 150 points overnight move. So quite a big move. When do you anticipate the sell-off happening? Going right into FOMC or during the Powell speech? I don't know. So if this just rallies all day, or even just chops around and slowly grinds up all day until FOMC, I would think it would be like right when Powell speaks. We'll probably see volatility. So I kind of want to play on the volatility. But I mean, like, don't just copy what I'm doing, obviously. I'm taking the risk. Like, I'm on evals. It's nothing crazy. I'm taking the risk because we've had such a massive move up over the past week. So just a massive move up with zero retracement. You know, like a good healthy retracement would be a pullback to like 25,600, 25,550 to fill the gap. That would be a healthy bullish retracement. Like if we go to the daily chart. Well, you probably want the 4-hour chart, but let's look at the 1-hour chart. Like any retracement, like you can even retrace all the way down to 25K and that would still be bullish because overall trend would be higher lows. This has just been extremely extended, so that's why I'm more comfortable with playing the short because today there's going to be volatility and there is a possibility it's to the upside. So anybody that is playing short just gets squeezed like massively, and this squeezes to like 26,500. That is possible. But I do like the volatility played to the downside for a bullish retracement, which could be quick and violent, and buyers step in and buy it back up very quickly. Either way, I think there will be a retracement. I think there's higher chance of retracement than not on a day like this. But gold might be a risky trade. I took a small position on the gold short, just in case both move down at the same time. But I will be getting ready to close the gold short. I
issues
think
a license for Rosneft German arm.
Because if it's gonna show me this, because as right now this could potentially be a bottoming pattern on gold. But if you can see here, this looks like a bottoming pattern as well. So I gotta wait and see. I need to see these levels reject here. If they don't, then I'll close the gold short. But these are the levels it has to reject for me to stay short in gold, to see the continuation of this downtrend. And I think I mentioned it yesterday, but on the downtrend here, or on this sell-off from all-time highs on gold, the statistical average for sell-offs after seeing a massive run-up like this, there's been, I think, only 4 or 5 times over the past 100 years where this has happened. But after topping out like this, the average move, I think, is about 20% to the downside. So there was like a time where I think it was like a 30%. There's another time where it was like 10%. And like other times 25, 20 or whatever. I believe I'm remembering those numbers correctly. but the average move, and by the way, the average move is not within weeks, it's within like a couple months. So that's why, like, you gotta be careful with the short, because this could come up and then fail and go further down. I'm just trying to play the moving averages and trend line-ish thing. But the average move, like I said, is 20%, so that would be approximately 36 or 3,500 over the next few months. That would be the average move historically. And that would line up pretty much perfectly with hitting the previous all-time highs here. So that would be pretty much a perfect move. Okay, NASDAQ pulled back a little bit. So gold and NASDAQ are trending inversely right now. A little bit. A lot of red coming in, but that hasn't meant anything lately. Yeah, 100%. Yeah, this is still very, very bullish. Okay, a break under 26,265 on NASDAQ, so that would pretty much be VWAP. A break under that would be a breakdown signal. That would be a break of this kind of trend line here. So I'll be watching for that. I'm not going to add on to the position though. I'm going to stay with this position sizing. Okay. Yeah, it looks like it's going to be just a sit and wait. Sit and wait for a couple hours. By the way, just so you guys know, if you're on fundeds, be careful not to trade through. I guess just friendly reminder. Careful not to trade through FOMC. Let's take a look at this pending home sales. Okay, so pending home sales. Interesting. South up 0.9%, Northeast up 0.5%, Midwest down 1.5%, in the West down 5.3%. So overall in the United States, pending home sales down 0.9% year over year. Okay, interesting. And that would mean technically we can't have trades between 1:49 and 1:52 p.m., right? So I'll be safe to hop in after 1:52. Yeah, it's I think for take profit, it's different for the different ones. So if you're using take profit trader, that's the one I know for sure. It's 1 minute before and 1 minute after. So if you're on a funded, just wait out the volatility to be safe. Okay, and then we have EIA crude oil inventories in 14 minutes, and then after that, there's nothing. We're gonna have just 3.5 hours waiting until FOMC. So nothing at all. You can kind of tell how the market's moving right now. That's exactly what everybody's waiting for. If we see a little bit of a sell-off, you know, in the next couple hours, then that'll at least show if the market's starting to get a little bit iffy. That's like another thing. It's like, if the market starts feeling a little bit iffy, which this gold move here may potentially already show that, even though the NASDAQ has continued to rally pretty much. So NASDAQ's continued to rally, but gold also made a pretty big move. So that just kind of, you know, if gold's moving up like this, that's possibly where maybe some smart money, you know, whoever is already kind of starting to move into gold, and maybe this is that distribution, Wyckoff distribution happening. That's potential as well. That'll most likely be a bit boring. I would imagine at least a slow downward trend of big money trying to quietly distribute positions, as the rate cut anticipated has already been built in. Yeah, that's what I'm thinking too. I think that's the most likely scenario.
In 10 minutes time now, at the bottom of the hour, get the EIA weekly inventories numbers. Crude oil inventories forecast as a draw of 0.899 million on the prior draw of 0.961 million. The range sees a build of 2.5 million to a draw of 3.587 million. Gasoline inventories forecast as a draw of 2.05 million on the prior draw of 2.147 million. Distillate inventories forecast a draw of 1.853 million on the prior draw of 1.479 million. And crude Cushing inventories, the prior was a draw of 0.77 million. Keep in mind, last night's US API crude oil stock change showed a deeper than expected draw of 4 million on estimates of 2.9 million.
That's crazy that Tesla moved up so much. Tesla has like, I think Tesla had double gapped up or like triple gapped up over the past week. It's nuts. Or sorry, not Tesla, Nvidia. Insane moves. I remember back in 2017, 2019, I was looking at Nvidia. I'm like, Nvidia is a good company. I was looking at like Logitech, Nvidia. I didn't like AMD. Like everybody knew that. At least back then, AMD's stepped it up now. But back then, you know, gamers knew about Nvidia and AMD and Intel. Intel was obviously the leader, at least for like processors and whatnot, more established. But everybody knew Nvidia from the gaming world. So when I saw the stock, I was like, oh, this is kind of cool that they got Nvidia publicly traded. And I was like, I don't know if it's like that good of a company though, because I was like, Nvidia, they just make video cards. I guess that's cool. It was like kind of, you know, cyclical. But I don't remember if I bought any stock, but I definitely did buy AMD because I thought it was cheap. I didn't really have to value companies back then. Nvidia, I don't even know what the valuation looked like back then. But Intel looked really good back then because they were actually bringing in cash and making good earnings and whatnot. And then I remember I think I bought Corsair, which is basically gaming peripherals. And I think I made a decent amount on Corsair, but it probably has dropped since back then. I think back then it was like $5 billion market cap. It's probably dropped now. It's just interesting to see how like a gaming video card producer grows to largest traded company. Like, it's so crazy. I'm just shocked by it. And I honestly think that it's a bit insane. So yeah, they're a 5.1 trillion market cap, and then Apple hit 4 trillion. Microsoft's at 4 trillion. Super insane. I definitely think Nvidia is going to dump at some point. I've talked about it before. Like, let me just give you some quick, just like to pass some time because the market's doing nothing right now. It probably won't do anything for a while. But let's see, Nvidia. So Nvidia's, I'm gonna tell you the margins. So I mean they've had good revenue
In 5 minutes
growth,
time now, at
earnings
the
growth,
bottom of the
all that
hour, we see
stuff.
the release of the
It's
EIA
like nothing to
inventories
scoff
numbers.
at. They have really
Crude oil
good return
inventories
on invested
forecast is a draw
capital.
of 0.899 million
Like
on the prior
they're a
draw of
really solid company,
0.961
and
million.
they've
The
obviously
range sees a
with
build of
AI,
2.5 million to a draw of
have
3.587
had a
million.
huge
Gasoline
rise in
inventories
revenues.
forecast is a draw of 2.05 million on the prior draw of 2.147 million. Distillate inventories forecast a draw of 1.853 million on the prior draw of 1.479 million.
We'll let this guy
And
finish.
crude Cushing inventories, the prior was a draw of 0.77 million. Keep in mind, we saw the release of the private API stock change last night. Crude in this report showed a deeper than expected draw of 4 million on estimates of 2.9 million.
Okay, so Nvidia only in the past couple years started going insane. So let's see here. So their margins have always been pretty decent, but they at least in 2017 they were at like 24% margin. 2016 12%. I think before that they might have been decent too, but they had a really good net margin. The problem I think is that over the past like 4 or 5 years, their margins have basically doubled and like even tripled depending on what years you're looking at. So for 2025, so far, their net margin is 55%, 55.8%. So like when you look at that, like if you guys know anything about margins, I'm sure you do. I don't want to talk down to you, but for those that don't, like you open up a lemonade stand and you're making 55% profit. All it takes is another lemonade stand to open up across the street and for them to be okay with making 30%. And then your margin goes down the drain. So Nvidia, like they're the leaders right now, and they're definitely taking advantage of like being the leaders and making as much money off of it as possible. But like it's temporary, and they will have competition in this space because like everybody knows now this is the cash cow. So like Nvidia definitely knows this, but the weird thing is that like investors just still price in as if they're gonna be like top dog with zero competition. Investors are pricing it in as they got the golden ticket. Nobody else is even gonna step up. So it's just interesting to see how crazily valued Nvidia is. It's valued literally at a price where they're going to be growing their earnings at the same rate for like 10 years straight, and they're going to keep margins like the same or grow their margins, which I think is extremely unrealistic. I think that yeah, I think that they're going to probably make less. Right when competition comes in, they're gonna have to cut prices and everything. So, anyways, that's my spiel. Evestein, good morning. I'm gonna check a couple things here. Let's see. Okay, based on these
1 minute
statistics,
remaining. I'll
gold
lead with
is
the
due
EIA
for a
crude oil
rebound.
inventories.
Okay. Okay, so I think gold bottom would probably be 4K. I think I probably want to close that gold short at 4K. Yeah, I think I need to do that. So hopefully it comes down here, we can lock that in. The gold short may not be
10 seconds.
may not be as good. I just looked at some statistics for massive sell-offs like this.
A draw of 6.858 million. That's a draw of 6.858 million, lower than the expected draw of 0.899 million. Gasoline inventory is a draw of 5.941 million. Draw 5.941 million, deeper than the expected draw of 2.05 million. Distillate inventories, a draw of 3.362 million. That's a draw of 3.362 million, deeper than the expected draw of 1.853 million. And Cushing inventories, a build of 1.334 million. Some strength in WTI crude here following that deeper than expected storage draw in crude inventories.
Oh, interesting. We may actually be in for a treat, guys. The put to call ratio on indices is crazy low. Interesting. Put to call ratio is sitting at like 0.6. That's the lowest it's been since 2021. And what happened in 2021? What happened in 2021? Well, it rallied quite a bit. Let's see here. The put to call ratio is extremely low like this, right before a big pullback. Okay. But it continued rallying. Interesting. There are a lot more puts than calls. Or sorry, the opposite. There are a lot more calls than puts right now, by like a massive amount. Very, very, yeah, very low put amounts right now in the market. That could possibly even force a sell-off. You're probably right on your Nvidia take, but they have a good 18 to 24 month runway. Also, they have started expanding their business to more than just chips, which will serve them well. Yeah, but I mean, I don't think it's a bad company. I think it's a great company. But like I said, you have to have some kind of value you can put on it, you know what I mean? If I offer you a Ferrari, or like I don't even know what the best car in the world is. Let's just say the most expensive. If I say, hey, like you can buy this Bugatti, it's the best in the world, limited one of one. Well, okay, sure, we'll go one of one. And you're like, okay, like uh, and you don't even ask the price. You just give me your credit card, or you just give me your debit card, and you're like, here, I'm buying it. And then I'm sitting here like, oh, I'm gonna charge you $1 billion for it. It's like, it's the best thing in the world, but like, you gotta put some kind of reasonable price tag on it, you know what I mean? With Nvidia, like, legitimately, I mean, how many years, like, what's Nvidia's net earnings? Let's see. Let's just take a look. So here, I'm just gonna go through the financials real quick. Just real quick. So let's go to our screen. Okay, so here's the video, right? So here's the price to earnings, whatever, it doesn't matter. Let's go to financial statements. Okay, so trailing 12 months net income of $86 billion, okay? So let's pull up a calculator. Okay, so we're at 5 trillion. 1, 2, 3, 1, 2, 3. That's 5 billion. 1, 2, 3, 5 trillion. Divide that by 86 billion 600 million. Okay. So far, if they make the exact same net income for the next 57 years, you're good to go. Okay, so if they make the same exact net income every single year for 57 years, you'll recoup your investment. Okay, but you can't only look at that. Now we'll go to their balance sheet. Let's look at their assets. Okay, they got $100 billion in assets and they got $30 billion in liabilities. So you're buying it, you're getting a total equity of $80 billion. Okay, so let's just take that then. So 5 trillion minus the equity, because you know you're getting that. That's basically cash, basically pure value. And we take away the 79.33. Whoops. Okay, I'll just do it. Negative 79.33 0 0 0 0 0. So you're buying it for $4.92 trillion right now with its current. I mean, let's go to cash flows. Okay, here's their free cash flows. And like, look, they were literally bringing in like less than 10 billion just a couple years ago. Now they're bringing in more. But it's like, let's just say 80 billion. I mean, it's absolutely crazy. They're not gonna, like, even discounted cash flow, it like makes no sense. It makes no sense. The only way this makes sense is that like this stays the #1 biggest company in the world, and also inflation goes to like hyperinflation at the same time. That's the only way where you would be like, okay, I guess I'm okay with having this in my portfolio, but definitely not as a top holding. Like it's absolutely insane. So like J-Rod, like the runway doesn't even matter. The runway doesn't matter. Like they could have the best runway ever. Like let's do here 1 sec. Let's do a let's see. Compound growth calculator. There, let's just do investment calculator. Okay. So let's go screen. Let's see. Okay. End amount. Okay, so let's just say that they make a bunch of money and they're investing it, and also whatever. We'll just, this is an investment calculator. I don't want to do like more complicated calculations. But let's just say they're 80, 1, 2, 3, 1, 2, 3, 1, 2, 3, 80 billion, right? It's million, billion. Okay, let's just say over the next 20 years, they're doing all this and they're growing it at 10%. Let's go 20%. 20% annually. And they're also making, let's just say, another 83, 80 billion, but because of this growth rate, we'll just pretend. Let's go like this. Okay, so here we go. How much is this? $21 trillion, okay? So $21 trillion. So over 20 years, if they were to grow 20% a year for 20 years, just so you know, that's insane. I don't even know any companies that have done that. After already being the top #1 company. Like, there's companies that have done that, obviously, from like inception, but after being already the most valuable company in the world and bringing in like crazy amounts of growth, this is very unrealistic. But let's just say it. 20 years, they make $21 trillion of net income. So you're buying your investment right now for, let's just ease of numbers. You're buying it for $5 trillion in hopes of receiving $21 trillion over 20 years. Okay, so what is that? What is that? 21, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, divided by that. You're getting a 4.3x over 20 years. Do you think that's worth it? That's the question right there. Do you think that's worth it? If you think it's worth it to buy Nvidia, and by the way, like, this is also assuming they do this. This is very unrealistic. 20% growth for 20 years is extremely unrealistic at the levels they're at right now. This is very unrealistic. So with this crazy unrealistic number, you're probably going to expect to bring in this much return on your investment over 20 years. I would say that's a loss. Price to sales. Yeah, what is their price to sales? Let me check here. Okay, so here's Nvidia. Okay, so yeah, they got crazy good growth. Let's see, what's their revenue growth actually been? So they're doing 7, 37, 40 minus. They've had crazy revenue growth.
Bank of Canada's Governor Macklem now in the press
Earnings
conference says monetary policy is
growth.
providing some stimulus.
Earnings growth also very good, but they're not going to keep that up for 20 years. There's just no way. Price to sales. Let's see if we got that on here. Price to sales, 22.5. Tesla would take 150 years. You can't convince dumb money. I mean, the thing is, institutions are holding it too, but but they were buying up quite a bit earlier. But it's just, I mean, I guess they know a lot of people are just buying it up, so maybe they're just flipping it. But I don't know, it's weird. The runway I mentioned was the so-called competition. Oh, I got you, J-Rod. Okay. Yeah, that makes sense, J-Rod. Robert, Nvidia's top holding in SPY, look it up, but if they change it because it's overvalued now, look at below. Yeah, 100%. Yeah, I mean, Nvidia just hit $5 trillion market cap today. It's crazy. I think it's insane. J-Rod, you're way too logical. Must be that Warren Buffett analysis. Oh, yeah. But yes, they are way too overpriced, no doubt. See, and that's exactly what I'm saying. The thing about investing is you gotta make rational investing decisions. Like I understand like playing momentum, and like I take longs on NASDAQ even though it has a bunch of crazy overvalued companies. Like if you have to play momentum, like you obviously play momentum, but if you're investing, I think it's terrible to invest in companies like that. Like I wouldn't even want to hold them for like more than a couple weeks. You know what I mean? Because at like at any point, realization will will happen across the board, and that thing's gonna timber so hard. But yeah, I do stick to more of Warren Buffett style analysis, which it's like pretty dang simple. Like anybody can do it. Like anybody can do it, and I think I don't even know, like I don't know if like a lot of these finance nerds on Wall Street, if they like truly believe what they say, or if they just, you know, get paid a lot to do it. Maybe a mix of both. Maybe there are some that truly believe it. But whenever they like run their numbers and put their price targets and whatnot, and like the analysis they do is like so in depth, but it's also like so pointless. It's like the analysis they do is crazy, but then it's like
Macklem says the
it
job
makes
is never done.
then it's like why like right now, for example, for Nvidia, just like taking 5 minutes to look at it to see how it's priced, just taking 5 minutes, just like what I just showed you, like for their net income, it'll take you like 5 minutes or less. Just off that, you look at it and you're like, yeah, I don't want to own this company. You don't even need to do analysis past that. You don't even need to like go into all the crazy nitty gritty, and I feel like you almost never even need to, unless you're gonna have like a very sizable position in a company, and like you run your initial analysis, and it's like, oh, this looks great. Then yeah, you go into the deeper analysis, but like in reality, like that deeper analysis would be already for like, how does this company look like liquidity wise, like versus competition, like all that stuff. Like how long realistically should I hold this company for, you know, things like that. Like that's where you go into nitty gritty, and that's where you like potentially set like a price target of like, okay, this company is this price, I think fair value would be this price in 5 years or in 1 year or whatever. Like only then I think you set those I guess price targets. But like a lot of these analysts, they just run a bunch of weird stuff, and then they just set these bogus price targets. It's crazy. Like this morning, the reason why Nvidia capped up is because somebody posted a $230 or $250 price target on Nvidia. Like, are you out of your mind? Are you insane? Evasteen, funding account link, please. What do you mean by funding
Canada
account
Senior
link?
Deputy Governor Rogers says the Canadian
Are you
dollar
talking
is
about
still
for take
paying
profit
its
trade or
shock
for what?
absorber role.
Okay. Testing view app now.
Rogers adds the Canadian dollar is behaving the way it usually does and how it is meant to.
I feel like I go on a spiel like every single day. About how crazy the market is and whatnot. Prop firm? Okay, one sec. This one's the take profit trader one. I've got the random bot that posts links every so often. But that's the take profit trader one. It's 40% off, and then no funding fee. So if you do like Apex or anything, the initial cost is cheaper, but there's a funding fee as well. So take profit trader all in price is cheaper. Just gotta make sure to pass it. And then it's got no monthly fees after you get to funded. So technically whenever you buy an account, the eval, it's technically a subscription, a monthly subscription. So just make sure to pass or or fail. If you got like 1 day left of it to make it or break it, or 2 days, like you got to just go full
Bank of
port
Canada's Governor
and try to
Malcolm
either
says
pass it or
consumption is
fail it, because then
underpinning
it'll
economic growth.
resubscribe you. So yeah, you got, whenever you get it, you get 30 days to pass. After that, no fees, no other payments at all. And you could keep those accounts indefinitely. You just got to make sure to take one trade at least a week so they don't deactivate it. Okay, I'm just looking at some stats here. So with the momentum that the NASDAQ has been seeing, there is basically 100% chance of massive upside into next year. Yeah, this is very interesting, these statistics. %, positive, average move of 27% a year later, with like how the NASDAQ looks right now. It's just based on backtest ranging back to 1980s.
Says we expect the pace of consumption growth to moderate.
Very interesting. And that's the stats of whenever the NASDAQ is above the upper Bollinger Band, and its intraday low was more than 0.3% above the Bollinger Band, which we're like well above that right now, well extended. So even after a week, it's 75% positive. So even if we do get retracement here, based on backtest of this market movement, a week later the NASDAQ's still positive. So for anybody that's like trying to go long-term shorts or anything, just be sure you're aware that previously when the market has moved this way, it has been overall positive and continued its momentum over the months, over an entire year. Chuck Rose, it's helpful when you explain things from your perspective. Please continue. I want out of Nvidia, so I sold covered calls on Friday. Strike at 205. It was a costly mistake, but now I know I'm out and I'll wait. Yeah, I mean it could pull back and you'll still be out of the money on those. I mean, Nvidia legitimately gapped up overnight another 5%, so it's pulling back a little bit. Oh, you did covered calls. Oh, you sold covered calls on Friday. Okay, Friday. That was 186. Wow. Yeah, that's nuts. Dang, I'm sorry. Yeah, that's unfortunate. 205. Yeah, and I bet you were like, this is definitely not hitting this. I would think the same thing too. Wow. Well, hopefully it pulls back and you can keep that position and continue to sell calls on it. Cause yeah, those calls definitely went up in price by a lot. What date calls did you sell? Did they expire this week? Or are they like a month out or something? I'm hoping they don't get exercised. So you can collect more premium. Yeah, like whenever I talk about like my perspective on the market and valuations and everything, like make sure you guys know that it's not like I'm not saying it to where it's like this means the market's going to dump or this means that this or that stock is going to dump. Like the market can stay irrational for very long. It can legitimately take years for the market to come back to its senses.
Macklem says a material
And
change to our outlook would not
sometimes
just be 1 month of
it
data.
has happened before, but sometimes like see how the NASDAQ's at 26K right now? It theoretically the market could come to its senses by the market legitimately trading sideways for the next 5 years. Like that's one way for valuations to come back to reality. The market could legitimately just not do very much at all for the next 5 years, and that's it. What's your TP on this short? I would like to target 26K a little bit. I'd probably take out a little bit before 26K. I would think, so I'm targeting basically yesterday's lows, which is 26K exactly. But I don't know if it'll actually go that far if it does sell off. So I would think potentially like 26,050. I'll just have to see where it's at. I have my orders set here just in case of like a very fast sweep through here. So I make sure to take advantage of a move if it does happen. But like if it stays like super mega bullish, I would think 26,050 could be like absolute bottom. So I'll just be ready for that. As of right now, like I'm just holding it. Market's not doing anything at all. And yeah. Now we still got the gold short, and the gold short I'm a little bit more iffy on. Especially if the NASDAQ does dump a bit. I think gold may bounce off 4K. I looked at the back test on gold, and it looks like based on back test, gold does push a bit before continuing. Because gold did make like a crazy big sell over the past several days, past week, really big sell. So like a rebound is definitely in play. But overall back test, gold does go lower over the next month, 2 months. Okay, so end of week and November 7th expiry. They're 300% up. I'm good with selling and waiting for a pullback. The A bubble is real on the capital side. The real appreciation side is going to rip, but who knows when. Oh, the real application side. Gotcha. Yeah. I mean, even if you do get those called out, I mean, I'm hoping you got a good return on them either way, on those Nvidia plays. So like the reason I like buying stocks that I feel are undervalued is because I have more peace of mind. Like for Nvidia, for example, whenever Nvidia pulled back several months ago to about $100 a share, like let's see here, right? Where was it? Oh, it was like all the way back here. Oh yeah. Oh, that was the April sell-off. Okay, so whenever Nvidia pulled all the way back here, and then looked like it was bottoming, I think I bought it at like 110 bucks a share. And I sold like on a gap up. I sold like on a gap up pretty much instantly after buying it. And that's because like even at this price point, I think it's overvalued. Even in the $100 range. So like I knew that momentum would come in, but I sold it off pretty quick.
On the session here, according to the
But obviously, you know, it's doubled in price since then, you know. But for me, it's like I get more peace of mind if I'm buying companies that I strongly believe are undervalued. And even if those companies go like down 20% or something, I'm not even worried. Because I've got the conviction that this company is undervalued, and at some point investors are going to realize it and they're going to start piling money in. I mean, I'll give you a couple examples here. Let's see here. I'll give you a couple examples. Share my screen. So a couple examples here. Let's see. Ulta is one that I had strong conviction about. Ulta, I believe was very undervalued. Back here. So let's see here. I bought it multiple times. Let's go to the weekly. Okay. Okay, back here. This was I believe this was the first purchase. I bought in the 380s. I ran the numbers on this, on Ulta. Very, very undervalued at this price.
Bank of Canada's
I bought it,
Deputy Governor
and then when it got up to this level, this was approximately fair value. Maybe like 5% overvalued, something like that.
Says equity valuations
up here I sold.
Look stretched.
So this was, I don't know, 30% gain, 45% gain, something like that. This Ulta trade was it. Whenever it came back down here, I was like, oh yeah, this is undervalued again. So I bought more and then sold more on this pop up here. And like recently it's been trending down a little bit, but this was a company that like I ran the numbers. It was very undervalued. I mean, what other examples do I have? It's like these kinds of companies I don't have to worry about. If I have Nvidia, I'm definitely going to be worried because like fair value on Nvidia is probably like $40 a share. So I'm just like, well, I hope the momentum continues. I mean, I can't remember any stuff right now. My mind's completely blank, but I'll give one more example. T. Rowe Price, it's not the greatest example, but down here, I bought up a lot. It was at over 5% dividend yield. Very, very deep valuation. And yeah, a lot of other investors bought it up here massively as well. And yeah, it's bounced up about 30%. Easy money. But it's obviously, you know, not like Nvidia, 100% gain or whatever, you know. But guess what? If Nvidia dumps 50%, that's going to be totally normal and it would still be overvalued. If T. Rowe Price, like T. Rowe Price wouldn't even be able to dump 50%. I don't think it would even be able to dump that much because investors would pile in to buy it up. Forget, I'm assuming nothing's going to happen until the Fed interest rate decision in a few hours' time. Yeah, possibly. Either nothing happens or people start taking risk off early. We'll see. I think there's a higher chance of investors taking risk off early than adding on risk before the Fed meeting. Could you imagine a couple hours before the Fed meeting and interest rate decision, a bunch of traders and investors are just like market buying the entire NASDAQ and all stocks? They're like, oh, it's coming up. It's in 2 hours. We got to make sure to load up before this skyrockets. I don't think so. So I think maybe there's a higher chance of a little bit of risk off maybe before, but we'll see. Okay. I'm also looking at back test of October through January moves. If the trailing 12-month performance is above 10%, it looks like it's positive all around. About 80% chance of the market being up into end of year. So 39 out of 40 years where the market has moved this way has the market been down into January. So that's another interesting thing. The only thing is, let's see here. Oh, actually, no, never mind. Yeah, we actually look decent for a bullish November, December based on backtest.
Bank of Canada's Governor Macklem says we could get 2 negative quarters, but that's not our forecast.
So overall, 2026 is most likely going to be extremely bullish based on past 100 years data. But also, yeah, I guess there's a little bit of mixed data. Also, because of valuations, though, previous overvaluations time frames, there have been pretty nasty pullbacks too. It's interesting.
And the press conference with Bank of Canada's Governor Macklem has now ended.
Thank you, Lynette. Get us in the algorithm. Here's another potential red flag. Yes, please. Here's another potential red flag. So apparently, New York Stock Exchange margin debt 2-year % rate of change is getting to dangerously high levels. So we're not exactly at 2000, 2007 levels, but we are getting to a high level. We're getting to 2022 levels and 2011 levels. So margin debt is extremely high as of right now. As a percentage, not a dollar amount. So margin debt is very high. That could potentially cause a big pullback to get a bunch of margin calls. Okay. By the way, we had CVS earnings this morning. I think CVS moved pretty well to the upside, I'm pretty sure. It doesn't have anything to do with the NASDAQ, but that was a stock that I believed was fairly undervalued a couple months ago. And we're up 60% on it. We're up 60% on it, and in how many months? Technically, it's doubled in price since about 8 months ago. But yeah, made 60% on it on CVS. Boring company. But guess what? A lot less risky than crazy tech. Hindsight 2020 tech. I mean, who knows? Back then, if I knew that Nvidia is 100% gonna double, then I guess I would have jumped into it. But either way, like with that one, I would have my heart racing every day. Okay, so we got Meta, Microsoft, Apple earnings today as well after hours. Dang, I forgot about that. Oh, guys, today's gonna be a crazy earnings day. Oh my goodness. Wait, wait. How did I forget about this? We got FOMC and 3 huge company earnings. How did I even forget about this? I'm like noticing this super late. So guys, man, after hours plays today may be insane. Meta, Google, and Microsoft all dropping at the same exact time, 5 minutes after market close. They're going to be dropping earnings. We could see some crazy movements in the NASDAQ. Crazy volatility may be coming in. Wow. That will be fun. Hopefully you guys are ready for that. Okay. Anyways, as far as CVS, it looks like it gapped up like 5%, kind of consolidated, so nothing much. Okay. So both gold and the NASDAQ have trended down just a little bit. Gold could potentially find a bottom here and trend up if the NASDAQ continues down. Then overnight low, what's that? That's 26,150. 26,151-ish for overnight low. Okay. Yeah, today's gonna be crazy. Okay, so there's that. I guess tomorrow there's gonna be, oh, Comcast is gonna report earnings tomorrow. Dang, Comcast might actually be a good one. I would actually be tempted to buy calls on Comcast. That one's like a very boring one. But it actually, I feel like that has potential. I'm about to see what call. Thank you. I'm gonna see what the calls are priced at. Because Comcast has been trending down for like an entire year. And it's basically gotten down. Here, let me show you guys Comcast real quick. Not exactly gonna blow your mind, but just to show y'all. So CMCSA. Okay, so check out this weekly. Check out this monthly, guys. This is huge right here. Just so you guys know. This is huge. You see the Comcast? So weekly, look how bad this looks. It's like it's downtrending. It looks terrible. Guess what? I feel like this company's pretty dang undervalued right now. But you know, it does move up and down a lot, and it does pay dividends, so it's not as crazy. But look at something very, very interesting, curious, you know, whatever. I'm on the monthly chart. Look at this. You see this purple line? You see this purple line? Obviously, it can fall below the purple line during recessions. But do you see this purple line? That is the 200 EMA. We're on the monthly candles. Look at what happened during bullish runs. What happened at the purple line? Insane jump. Insane jump. And look, where are we at right now? Where are we at right now on Comcast? Interesting, guys. Just like the wide volatility ranges that preceded the upward move yesterday, this may be the start of the downtrend we'll see. Yeah, we'll see if it continues down until FOMC. I honestly would not really like just a slow downtrend all day until FOMC, because that would mean that there's probably going to be a volatility spike to the upside. Is it true that you can request your buffer money even if you didn't pass the whole buffer amount? I think, yeah, you can. But I believe if you do request it, like, you're gonna forfeit your account. So if you would get your buffer paid out without fully passing the buffer, I think you would be, like, forfeiting your account and they would have to close it. Because, like, your buffer is your drawdown. So, like, that first buffer, that initial buffer that you need to grow, you're also growing your own drawdown. Once you pass to the buffer, now you have your own drawdown, and now anything above that is like your daily payout, or however often you want to take payouts. So if you do end up like requesting a payout of the buffer, you know, you like made half of the buffer, or like whatever, almost all of it, and then you request it, technically you would be drawing yourself down to 0 and making your drawdown 0, which means that you would fail the account. Okay, anyways, that's my thought on Comcast. It looks very interesting. I feel like the risk to reward here is crazy low. But who knows? I guess we'll see. I guess we'll see tomorrow. Tomorrow morning when Comcast earnings come out. I am really tempted to buy calls. I'm about to look. I'm about to look at what the calls are priced at. Let's see, options. And we wouldn't even need like a week out. The options are actually priced pretty high. Interesting. The options are, well, I guess it's not even that high. That's not high at all. Let's see how earnings have moved them previously. Up 10%. This one is down like 5%. Down, gap down like 20%. Gap up 10%. Okay, previous earnings, I guess, have moved the price decently. But I feel like the options play maybe even good, like not even just playing earnings, but just a good spot to maybe even leverage for a long. Let's see what end of year calls would look like January calls. 79 days out. Oh wow, very cheap. What? Okay, guys, check this out. 79 days out for Comcast. A $30 call is $1.34. So that's $1 out of the money for $1.34. So your break even would be $31.30. $31.30 is like 5% above the current price. If I buy calls 2 days out, it's like it's 42 cents for that same exact option. So like the cost is like 30% of a 79-day call. That's kind of crazy. How often do you take payouts? I haven't been doing it long enough to exactly make how often, but it's been a couple months since I've taken one. Comcast implied volatility high? No, it seems like the implied volatility is not that high. It's 39.22%. So I mean it's higher than its usual. Huh. Guys, I may just pick some up. I may just do it. That may be the play. Okay, place my order. I'm gonna try to do an in the money call expiring January on Comcast. Because I showed you guys it's at the monthly 200 EMA. It's got earnings coming up, so tomorrow morning. So like, I don't know. Earnings could potentially launch it from there. But yeah, earnings probably would be the catalyst to launch it and have it start up trending. Yeah, true, Jahan. But I'm actually surprised with how cheap the options are for it. I mean, it's been downtrading like crazy, but it did hit that 200 EMA on the monthly that I was showing y'all, and that was like a big bounce zone 2 times previously. So an in the money call is only about $1. An in the money call would be break even with it going up only 2.5% over the next 3.5 months. I don't know, I feel like that's easy money. Okay, there we go. Our order got filled. Okay. Lynette, FOMC will 100% move the market. It will 100% move the market. But like, after the movements are done, it could just be flat on the day. Like, but it will move the market. There will be some crazy whipsawing. It'll probably be like boom, 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 boom. If like nothing special happens, it'll be like boom, 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 and then just stay the same price and slowly trend up. Okay. Anyways, so tomorrow morning we got Comcast. I picked up a call, just one call, in the money for end of year. I'm not. I kind of hate options, so like I don't make big bets with options anymore. But I feel like that one's a decent one. So that's Comcast, and then after close tomorrow we got Amazon and Apple. Those two reporting. So Amazon and Apple. So today after close and tomorrow after close, we're gonna see some big moves. Big moves. Weezer fan, you're copy trading. Well, good luck, brother. But I'll show again. This is the thought process. So this right here. This is a launch pad. That call option that I just bought, I got it I got it. I got the 27.50 in the money call for like 280. So to break even on that call, all it has to go up to is like $30.30, or sorry, $30.80. So it only has to come up here to break even. Just right here is break even. Up here, it's already 100x gain. Just right here. It's about 10%. So yeah, we'll see. It's had some pretty massive moves. And earnings, you know, they've been kind of mixed for how the market's moved. Like here's previous earnings, I guess. A little bit of a dip. Here's this earnings. It had a gap down and gap up. Here's this earnings, super big gap down. This earnings, not I guess gap up and then sell off. This earnings, sell off. This earnings, big bounce. This earnings, big bounce. So it's been a mix of all of it. This one was gap down. But like, where is it? Where's our big move? So 2022 and 2017. So let's go 2022. So this was earnings. So earnings didn't do very much, but it was like the change of trend, because this was trending down for a long time. Change of trend, and that was at that 200 EMA. So it's 2022 and 2017, I think, right? Oh, that must have been nothing, actually. So it's actually only been like really one true 200 EMA touch. This was not an actual 200 EMA touch. But yeah, I've done the numbers on yeah, I did. I've done the numbers on Comcast, and I actually think Comcast is fairly undervalued. Like the risks with Comcast is that like Starlink somehow completely takes over all internet and everything. Or like, I don't know, somebody completely takes over internet and like streaming. But Comcast is kind of a leader in that space, or one of the big dogs. They got a lot of infrastructure, all that. Like I think they're pretty decent. Okay, market's coming down a little bit. I'm gonna try to show y'all real quick Comcast valuation type stuff. Let's see here. Screener. Okay. So CMCSA. See overview. Okay, so just like looking at forecast. Here's the analyst estimates, by the way. Finally, like one time I actually agree with analysts. This is analysts' expectations over the next year. So the low it's 26 analysts, and the very lowest analyst is expecting $31 in the next 12 months. Currently at a long-term uptrend line. Is that for NASDAQ? Anyways, look at EPS. I mean, they're just solid, slow growth company. EPS expected to continue. Let's see financials. Look at this price to earnings ratio, guys. You see this? 4.86 price to earnings ratio. This seems like massive deep value to me. Okay. And how about this? Look at this. Let's compare this to Nvidia real quick, actually. Let's just do it for fun. Nvidia. Let's compare these financials. I mean, Nvidia's are gonna look way better, but look at Nvidia's revenue, and then look at Comcast. Comcast is almost the same revenue. I mean, I know profit is way less, but like look at the net income of Nvidia, 86 billion, and then look at Comcast, 23 billion. But guess what? Comcast is 100 billion market cap, and Nvidia is 5 trillion, 50x. Eva, the checkout platform will not allow me to use the code Pasha. It has to be all caps, Eva, if that's the issue. It has to be all caps, and then just make sure there aren't any spaces. Okay, statements. So we looked at the income. Let's look at balance sheet. So Nvidia has basically total equity of 100 billion. And look at this. Comcast, total equity of pretty much exactly the same. 97 billion total equity. Guess what that means? That means this thing is like pretty much trading at like book value. If they were to go bankrupt, well, not bankrupt, but if they were just to sell everything they have, essentially they'd break even. They wouldn't even like lose much. And it's growing too, so there's that. Let's see cash flow. Cash flow. Okay. Nvidia 72 billion. Comcast 20 billion. So like looking at all this stuff, guys, Comcast looks pretty dang solid. Pretty dang solid, if I might say so myself. But it's trading at 1/50th of Nvidia, but it has like 1/3 of its financials. The brain is wiggling. What does this mean? Either Comcast is deeply undervalued, or Nvidia is deeply overvalued, or it's both. Gotta love running numbers. Oh, we didn't even run numbers, we just compared them. Anyways. Okay, gold and the NASDAQ slowly coming down little by little. Numbers don't lie. Exactly. Yeah, excuse me. It's a good day, guys. It's a good day. Imagine taking like your entire net worth and putting it into in the money Comcast calls expiring like 3 years out. I'm not gonna do that, but I'm actually curious how much and you should not do that either. But I'm actually curious how much those calls cost. Let's see here. Let's see. Let's see 3 years out. December 2027. Wait, that's 2 years out. Oh, there's only 2 years out. Never mind. Okay, so 2 years out. Actually, not crazy. Yeah, actually not crazy. If you would go $25 in the value, you would only be paying $2.30 of premium at the current price. $2.30 of premium for 2 year out calls on Comcast. Wow. That's actually kind of interesting. Let's just say $3 premium, because that's the ask price. Or sorry, that's the bid price. Premium. I'm just basically Weezer. So right now Comcast is at $29 a share, and I'm looking at $25 calls 2 years out. The cheapest $25 call for 2 years out is $6.35. So so right now Comcast is $29. My break even would be $31.35. So I'm just looking at the difference between the break even and the current price. Technically, I might be using a wrong word for it too, because premium is technically just how much the option costs. But I'm just using the word premium here as the difference between the stock price and the break even price with that option. So the break even is only like 3. The stock would only have to go up 5% to break even. It would have to go up 5% over the next 2 years to break even on that option. I would think in 2 years you'd probably see like 100% gain. It's interesting stuff. Interesting stuff. I told myself I would not get back into options though. They could kill you quick. You've also never understood the break-even term? Okay. So, or the term break-even? Well, no, you've heard of break-even. Okay, so, here's what it would mean to break even. I wish I could show it visibly. Actually, I'll open up a notepad. So here. Let's say Comcast, right now, it's at $29. That's the share price. Hopefully you're able to see this. Actually, here, I'll zoom in. Comcast is at $29. I'm going to use this real example. The call that expires 12/2027, whatever. Let's just say $25 call. The $25 call is, I'm just going to use a round number for ease of it. The $25 call is $7. Okay? So, break even. If you buy this right now, this is the price of Comcast, right? The price of Comcast doesn't even matter, by the way, for break even. But right here we have $25 call. It's $7. Our break even on Comcast would be $32. So you're getting Comcast at $25. If it's above this price, you're able to buy it, because that's what a call does, is it allows you to buy it at $25 a share. So if it's above, you're going to exercise this call, or you'll sell the option to somebody that will exercise this. They buy it at $25. our break even, because we paid $7 of premium for this option, our break even on Comcast would have to reach $32 for us to break even on this trade. So our difference from today's price and what we want to achieve for break even is $3, or about 13%, like 12%. So this call is 2 years out, so 12/27, 2 years and a couple months. So basically you need to get $3 of stock growth, or 12% of stock growth at least, over the next 2 years. If it's only this growth over the next 2 years, then you get break even. If it's below this growth, you lose money on this trade. If it's above this, you make money. That is simple math, but some reasons it doesn't make sense. So break even is 100% gain because you're in profit. No. Here's okay.
Order filled.
Because we just filled. We just filled something. Oh, did we fill our gold trade? That's what it was. Okay, gold's dumping. All right. Sick. Yeah, we filled our gold trade. Okay, perfect. All right. Anyways, so you're saying that's simple, but you can sell the option with profit, no need to exercise. So guys, you guys are thinking of holding that option, and then the stock jumps in price, and then you sell it for a profit. That's what you're thinking of. Yes, in theory, if the stock like jumps in price on earnings, yeah, you can sell the option for probably a profit. But here's the thing. So Weezer, you're saying that's simple math, but some reason it doesn't make sense. So break even is 100% gain because you're in profit even at $26. So no, you're not. Whenever you buy this call right now, this is a real case scenario. It's happening right now. This call is basically this price, and Comcast is basically this price. You are paying $700. So $7 times 100, because that's how the options work. You're paying $700. Let's just use one. You're paying $7 to have the right of buying Comcast at $25 a share. You're paying $7 to get $25 price. Comcast is right now $29. If you buy this option right now, $7 for $25, you can exercise it instantly. But you know what that means? You're going to get, so exercise, you're going to get $4 profit. Except for you just paid $7 for that contract. So you actually lost $3. Because there's premium. And sorry for anybody that like this is basics, for anybody that this is like, of course, Pasha, why are you even explaining this? But for those that don't know, like this right here, that's the time value of money. That's the premium that you are paying. That's the premium that you're paying for waiting and for the risk and for the implied volatility and whatnot. This is what you're paying. So, guess what? What's this aligning with? Well, it's aligning with today's Comcast price and your break-even price. See that? So if Comcast moves up $3 over the next 3 years and expires this day, I'm not talking about it moves up $3 like in a week. I'm talking about like perfectly the call option literally stays $7 for entire 2 years. Obviously it fluctuates, You can sell it at a profit or loss during those 2 years. But let's just say it stays at $7 exactly for 2 years exactly, and it exactly moves up $3 in those 2 years, Comcast. Your time value payment was $3, and the stock moved up $3, and you break even, you make $0. And then if you go into the finance nerd side of things, you technically lost money here, even though you broke even, because you lost money on time value of money, because any money that you have working for you needs to be making interest. So anyways, that's the spiel. Did you get it? Yeah, no problem, Weezer. You'll have to watch an in-depth video explaining it later. See, this is a good example, guys. I don't mean to be mean, Weezer, putting it as an example. But this is a perfect example of, if you don't understand 100% how options work, do not even trade them. They're so risky. If you don't understand like those parts, because those are the very, very simple like parts of options trading. If you don't understand that, like, stay away from options. Be super careful, because if you don't understand those things, you will probably be ripped on options. Okay, anyways, our gold trade did play out. Our gold short, I don't even know how much we made on that. I don't know, a couple $100. Anyways, the gold short played out. We made a little bit there. I was trying to play. I would love to play the gold short all the way down here to test yesterday's low, or even last night's low. But right now it's getting to that psychological 4K level. This is the level that I would have wanted it to reject when it came up here, or even here. I would want it to just reject and continue selling off, but it did not. It broke through that psychological level. And right now it's coming down to test it. And yeah, I don't want to try to short into it, because there's a possibility this continues ramping up. Okay, as for NASDAQ, still chopping around. Sold off a little bit, bouncing a little bit. It's not doing too much. I do have it on the 5-minute time frame. So overall, I mean, it is kind of selling. It's got this little selling channel here. So there is like a possibility of, I guess, of adding on to this short. That is possible. We did get a sell signal at 271. Where was that? Okay, this candle right here is where we got the sell signal. This one right here. So that's where our sell signal came in. And so far it's been continuing bearish momentum. I mean, I could add on to this, but there's really no need to. There's no need to leverage more. Yeah, I don't think there's need to leverage more. We need to be careful, because gotta watch our drawdown, because when FOMC happens, we could see a lot of volatility. Okay. Whoever is shorting gold made good gains. Yeah, it wasn't too bad. Weezer fan, all I know is I make a trade. I make trade, I make or lose money. I'm scalping in and out, under 30 minutes preferred, but yes. Well, yeah, like, if you're day trading them, like, yeah, and if it's working, then all power to you. But it's definitely important to understand like the basic concepts of options, because you can easily jump into options that are just overpriced, where they have way too much implied volatility. And like, if you don't understand that, even if you're like day trading them, you're putting yourself at a disadvantage. because you're just fighting like insane premium burn. So like understanding those types of things, like even just understanding the basic of like what price does, because I think, I don't remember if you were doing index options. I think you were. Like even understanding like the break even part of it is pretty important, because like, I don't know, this might be a hard example, but let's say, I mean, yeah, using the NASDAQ is a hard example because there's so many numbers. But let's just say that like you have put and call options right now on the NASDAQ. And let's just say the call options are currently priced. And I'll just make like a line here. For the call options, the way they're priced, let's say the NASDAQ has to be above this level for you to break even, or at this level for you to break even. And then for you to break even on put options, you have to be at this level, for example. So, and this is just a random example, but like your one day expiring options, for some random reason, your break even for the call is up here and break even for put is down here. So like if that were the case, you're like possibly putting yourself at a crazy disadvantage here. I know that you're day trading them, so you're like playing the moves, but like in a scenario where like you don't know 100% the like break even levels, but you do know your key levels that you need to look for. Let's just say if your key levels are like way within the break even levels, it might not even be good to trade those options. You know what I mean? So it's like that's just a reason I think it's good to understand those basics. That would explain why my far out options have always trashed me and lost hundreds. Only do well with scalping moves. Yeah, and that's exactly why. It's because your premium's just getting burnt. Because like whenever you're buying those, like those options basically have like a 1% chance of actually getting in the money. They just have such a low chance. So like right when you buy them, they're already going down in price unless a big move happens. Because once a big move happens, then it's like the chance of whatever hitting is a little bit higher. So people are like, okay, now we need to bake it into the price. Yevin, Pasha, are you usually passing eval accounts one by one until 5 passed, or 5 at the same time? I've mixed it up. I've done 1 by 1 before. I've done all 5 before. It's probably less stressful to do 1 by 1. It's less stressful to do 1 by 1. It's just because you have, you know, less leverage, obviously, but also with Trade-Evate, you're not able to do bracket orders when copy trading. So going 1 by 1, you can use bracket orders, and it's just more peace of mind. Going to slow down trading November, December, do some studying. Thanks. Yeah, no problem, Weezer. Hopefully I didn't offend you or anything, but yeah, I just wanted to make sure you understood that stuff. I'm happy to have people in the chat that like you know, that could at least learn from some stuff that I talk about. I kind of I don't know if you guys experience this. I think we got a lot of people in the chat that are like very, very knowledgeable, but I definitely experience imposter syndrome, or whatever it's called, because I feel like there are a lot of people that know a lot of stuff. And I sometimes feel like I don't know like anything really, compared to almost everyone. But then like, you know, sometimes you gotta take a step back and be like, well, like you do know some stuff, and like a lot of people might not know the stuff that you know, or whatever, you know. So that's kind of why I made the channel, was like to talk about the basic finance type stuff. Because I just nerded out learning all of it. But I guess, you know, most people don't really even know the basics. And by basics, I'm not even talking about options. Basics, I'm even talking about like basics of like compound interest. Okay. So gold is bouncing at that 4K level, just slightly consolidating. See if it breaks through. I mean, it's a little bit of a spike in volume here. So buyers are kind of stepping in. We'll see. You don't take it personally, all good. Appreciate you taking the time. Yeah, of course, brother. Yeah, if there's ever anything you guys have questions about, or like anything you want to share, like I learn a lot of stuff from you guys too. So like anytime y'all are sharing stuff in the chat, like I'm learning every day with y'all. That's like for I guess related to school and whatnot. That's like the weird thing about taking like undergraduate classes for bachelor's. It's like when you go to the school, you're there to listen to a lecture and to not speak. You're there to sit there and take notes. When it comes to like graduate level / for the master's degree, there's a lot more of like give and take, where it's like you're learning, but also like people are educated, like students are educating each other. It's like more of two-way dialogue. And then I'm guessing for a PhD level, it's like completely like way, you know, the complete opposite spectrum of like sitting and listening to a lecture to like bouncing ideas and like teaching yourself and teaching others. Are you trading prop or live? I'm trading prop, but I do have a live trade right now. I just got a little tiny trade on the cash account. It's up about $100. But your experience is your experience, because people talk to me about Bollinger Bands and stochastic and act like if you're not using this or that, you don't know what you're doing. Oh. Yeah, that's me. I don't know what I'm doing. I'm not using those. What prop you use? I'm using Take Profit Trader. That's my favorite one, just because the like instant payouts, daily payouts, and you could technically take multiple payouts a day if you wanted to. I want to learn how to make money trading. I've been trading for 2 years, not profitable. I think it's all psychology. I'm like pretty much break even as of right now, but I'm not that far in my trading journey. So I really started day trading live. A big reason is, first of all, I feel like I know some stuff, and second of all, I'm on the step of the emotional maturity part. So I've already got like the technical analysis part, all that like done and over with. That's already, you know, about like 7, 8, 9 years of experience. Now I'm on to the stage of emotional resilience and risk management, I guess. And that's like the most important step. So the reason why I started streaming is I feel like it gives me more of a it makes me feel like I'm more accountable, you know. It helps me like not make as many dumb mistakes, you know, because nobody wants to make a bunch of dumb mistakes live, right? Okay, so NASDAQ selling off just slightly. Let's see what it does at the 200 level. psychological level. Gold just sitting right above that 4K level. So we'll see if gold actually bounces here, with the NASDAQ selling off a bit. Okay, NASDAQ still has about 50 more points to drop from here for it to just get to previous close. So it's looking good so far. So previous close would be around here. Overnight low. It's about 2150. It's looking decent though. It broke through both of these levels, so that's actually good. It's looking good for the short, I think, so far. Broke both of these levels. Now, important part is, will it break these levels here, which is about the 150 to 200. If it breaks that, I think we're looking really good for a nice retracement. Nice retracement, maybe to the 26K level. It's a possibility. Oh wait, Eva Steen. I never saw your message. Eva, were you trying to do a reset? I'm sorry, I didn't. I just scrolled up. I didn't, or I missed your message. You said you used all caps. Were you trying to use it for a reset? Because for resets, you're not able to do, you're not able to get discounts on resets. It's only on buying accounts. Have you used Top Step? If so, what's better? Was it better than Take Profit? I have not used Top Step. We have had some people in the community that have used Top Step. I think some people like it, but as far as I remember, whenever we compared like rules and how both of them work, I think the preference was Take Profit Trader. I don't remember exactly the exact rules of Top Step, but whenever I was talking with a couple people that did use Top Step, whenever we compared the rules and the payouts and all of that stuff, they said, oh, like, I should probably switch to Take Profit Trader. I don't remember exactly who that was, but that was a couple weeks ago. And then, like, Top Step has had some weird outages. So I haven't had, like, any issues with Take Profit Trader and going through the Tradeovate Pro platform. But, like, we've had some outages, at least a couple over the past several months. And Top Step has been out, I think, both of those times. So their platform was down. I mean, I think they compensated people for it, but like they weren't able to trade. If that's a factor, I guess. But I don't know. I don't like them also because they have their like Top Step stream. And what I've heard and from what I've seen, it's the people that they have on there like don't know what they're doing basically. So I don't know. If you got people kind of on your official stream and they like don't really know what they're doing, I feel like that would be kind of weird. But there are people in the community that do use it and like it. Let's see here. Man, Tesla's still positive gamma. Okay, Tesla's still above that 450 level. Okay, Nvidia came down to 205. Okay, there's the bounce on gold. Let's see if that actually continues. So it did bounce off the 4K level. Testing at 415-ish. Maybe potential continuation of this trend. Looks like if you draw a little trend line through here. So let's just do that real quick. Just for the sake of doing it. You draw a little trend line through here. And we got higher lows going on gold. So, I don't know. This is a potential... I feel like this is a potential pretty low-risk trade. To be honest. Maybe I'd try it. You'd only have to risk like 10 points here, right? Maybe I'll let this consolidate for a little bit. Because on these types of bounces, it looks like you get double bottoms pretty often. Okay. NASDAQ. We're below yesterday's high. Oh, yeah. Yeah, true. Yeah, I mean, it's good that... Yeah, and that's where these bottoms are. Okay, yeah. So it's good that we broke below this level here, this overall level. Need to get below that 200 level, though. So that's where it just bounced. And then gold. Just bouncing. So I'll be looking for a potential gold long here. We'll see. I'm not ready for it yet. Okay.
Honda says production cuts are due to a chip shortage in North American plants.
Okay, I'm gonna try to take a gold long. Go 1, 2.
Order filled.
Okay, I think I'll risk 250. Or it's 200 on that. Yes, that'll be a break below that. Okay, I'll risk them that. Try to take the gold long. And then how much profit do I want for this? Okay, I think I'll take the first partial at 2 for 1. And second at 3 for 1. I'll do that. So risking $200 for about $500. 2.5 total. Okay. Feel like that's good risk for reward, especially with this these higher lows holding. But you know, you never know, this could peek through a little bit here. Okay. I'm gonna make a quick commercial break. Haven't done many commercials. Time for a commercial. We'll use the restroom and I'll be right back. For those of you that are using YouTube Premium, enjoy not getting a commercial. Okay? See you guys in a bit. Yeah, Weezer fan, I guess you got premium. You're using YouTube Premium, otherwise YouTube is unwatchable. Yeah, I'm tempted to get it. I haven't got it yet. Gotten it yet. I definitely hate seeing ads. As I'm literally making a commercial break. How dare you, Pasha? Okay, nice breakout on gold. Perfect. I like it. I like it a lot. Let's go. It's going to test a little bit of a trend line here, though. We got something like this here. Something like that. So we need it to break through there and come on up here. No, I did put an ad. I don't know if it like randomly selects who gets it. No idea. I just hit insert ad and walked away. We got some opera music playing here now. Okay, that was about a 40-point bounce on NASDAQ. For the gold trade, I think I'm gonna pop one more in here. Let's go one more.
Order filled.
Put this as the risk. And we will go right here for take profit. Just on that one. Okay. On Comcast, you bought the calls or bought the stock and sold a covered call? I already have Comcast stock. I just bought a call. I did not sell calls. I do not want to sell covered calls on Comcast. I think it's it's undervalued. Every time price breaks his trend line, he just draws a new one. I mean, it's kind of what you gotta do. You gotta improvise. The market doesn't always move exactly how you expect it. But like, this is the stronger trend line. That's why I drew it. This is the stronger one here. So like, we had the bounce here, a little consolidation, little liquidity sweep here. And then, you know, there's a bounce. Already here, you could have drawn a trend line right here. Once you got this touch, this touch, this touch, right here, you can draw the trend line. And then what you saw here is another trend line here, so it's a wedge. So, a low wedge, lower highs, higher lows. It wedged up, and then it broke out. And now it's doing the same thing. So, it wedged here. Right here, it could wedge. It's a little bit of a tighter one, potentially. And then it either breaks out or it fails. That's about it. Well, I mean, I guess this isn't even really a trend line. It's just a wedge. But yeah, agreed. Anything you can connect any two dots. But you know, you somehow have to make sense of how the market's moving. Or you can just say, the market's moving irrationally all the time, so I guess I might as well just take random trades and hope for random outcomes. Yeah, no problem. Into oil. Okay, 9:25 my time. Okay, so we still got nothing else. We got nothing else for an hour and a half. Perfect. So we're just waiting for FOMC still. If trend lines printed cash, every chart artist would own a yacht by now. Really? So you're telling me that trend lines don't print cash? Well, let's see here. How about this trend line? How about that one? Does that one print cash? It looks like it does. What about putting a trend line on the entire S&P? Since inception. The reason why like, especially long-term trend lines are actually like pretty repeatable is because like all investors are using time value of money and like they're like calculating their fair values, and every single day those fair values go up in price because money becomes less and less valuable every day. And sometimes whatever they're thinking for the day plays out pretty obviously as well. You know, like at this point they're like, okay, 3,900 is the absolute, like, we need to be loading the boat at 3,900. Then after like this started going, they're like, okay, up here, let's think what price do we want to load the boat now if it comes down. Okay, let's load the boat at 3,930. Strong buying 3,930 in right here. Then it bounced, and then they're like, all right, where do we want to start loading the boat? Okay, let's start loading the boat in the 50s and 60s. Okay, that's where they start loading the boat. And the same thing goes for like selling too. Whenever it's, right now it's a bullish trend on the shorter time frames. But the same thing happens when it's a bearish trend. They start saying, where do we want to unload the boat? And then every single day that price gets lower. Because risk is higher. Or implied risk is higher. Sure, it prints cash right until S&P decides to erase your perfect line in one candle. Well, yeah. That's where you reassess. NASDAQ started looking good again. For what? For the longs? Buyers did take control here slightly. It's testing the bottom of the opening range today. Bottom of the 15-minute opening range, which is right here. Oh, right here. Wait, right here. Wait, right here. Bottom of the 15-minute opening range. There it is. Jonathan, watch your language, even if it's rated PG words. But market manipulators on gold. It wasn't this volatile 2-3 weeks ago. It was nice and steady to the upside until the huge dump we had on gold. Yeah, true. But that, like, just so you know, the run up that happened on gold, it's like that this doesn't happen often. This is like once in like a decade type of run, like the run this has had. It's like once in a decade, maybe even more rare. This does not happen often. Yeah, draw one more line. Maybe this time the market will finally respect your art skills. It's not about the market respecting it. You draw the line and you watch how it reacts. You watch how it reacts. If If it is staying above this and trend and making higher lows, that's all it really is. It's just taking a look to see where approximately the higher lows are getting set. That's all it is. Approximately where are the higher lows being set? What's the overall trend? That's all the trend line is for. So if this trend continues to the upside, this is approximately where we would want to see a higher low. You don't just jump in here like right away. You could jump in here for a quick bounce. This would have been a really nice scalp. It bounced like exactly where this trend line lined up. But if you want to, you look for confirmation of a breakout, which I didn't wait for the full-on confirmation. Confirmation would be kind of breaking this little selling channel here. But confirmation, it's probably going to make a higher high and create a higher low. That's all it is. Trend lines are D-tier setup. They look cool on charts, but the market couldn't care less about geometry. It's not about the market and geometry. It's about, are people paying higher prices to get in? That's what it's about. It's not about geometry and art. It's about what is the price people are willing to pay now? Where do buyers step in now? A line is an easy way of seeing it visually. That's all it is. It's not about, oh, this is the whatever, the exact level. It's just approximate. Like here, we know that buyers were willing to step in here at 3,900. Then we saw that buyers were willing to step in at 3,920 here. Then we saw what buyers were willing to step in at 3,940. Then at 3,960. Then at 3,970. Then at 4,000. EMA trader, what's up? We're trading gold and NASDAQ. If you double your money on SPY in 7 years and you go buy a 25K truck for 50K, you didn't make anything really. Yeah, true. That's why I was making the 10K challenge. To beat the market. Beat those market returns. True, but those people don't check your trend line before placing an order. Yeah, I know. The trend line isn't for them. It's for me to just visually see how it's been trending. That's all it is. Chauhan, give us some examples of what would, like, how, like, on a trend like this, what would be your reasoning for entering? Any details on the new challenge? Yeah, I'm gonna have the video posted this weekend. But it will involve day trading. It will involve day trading and also continuing in the same sense of what I was doing. So it'll be fun. But the challenge will now be integrated into the daily live streams. Stock market is just human psychology on a screen. Yeah, true. Yeah, so look out for that video, guys, for the new challenge. It's going to be posting. I'll try to post it either Saturday or Sunday. Got the editor working on it right now. I can edit, but I have like very little free time to edit. But Chauhan, if you want, like share what your opinion is on entries and exits. Like what is your, ideal? Like what do you use? Because if you're saying like something like this is completely terrible, then give the alternative. Explain to us what an A-tier setup would be. I'm not saying this is A-tier at all by any means. The biggest reason why I'm taking this is because it looks like the 4K level is being respected. It looks like buyers are now willing to take the 4K level. but I haven't got like complete confirmation yet because we haven't gotten a breakout. I did take the trade early. Trend lines can work almost any strategy if you're disciplined. Yeah. Most traders fail not because their method is bad, but because they can't follow their own rules. Yeah, that's 100% right there. You're in a gold short at 011. Okay. Good luck. NASDAQ's starting to curl down slightly. If NASDAQ continues making lower highs, I think gold continues to bounce. Why did it never revisit the previous high this time? Bali, for which instrument and for which previous high? What are you talking about? Are you talking about NASDAQ previous high this? Or this, or what? NASDAQ? So why did NASDAQ not reach the previous high the past 3 days? Oh, you're saying why has it not come down to the previous high? Like down here to fill the gap? If this is what you're asking, why it hasn't basically filled the gap yet? It's just because everybody got ultra bullish and it got a gap up here. I would say this is a bit of short squeezing here. Short squeezing and pricing imperfection for FOMC. I would think that's why. This is a bit of a like rare instance. Or I guess I could say uncommon. It's not that rare, but it's uncommon for this big of a run up. Pretty much 5 days in a row with no significant retracement. Yeah, fairly uncommon. But it's just because, yeah, pricing imperfection and a lot of shorts being squeezed out of the positions. You know, and a big reason for that was this massive gap up. So anybody that was shorting here, they got trapped. And this big run up was just squeezing a lot of them out. Anybody that was trying to reshort at these tops or near these tops, they got squeezed out even more, and then squeezed out more, and then yeah. Do you think it will retrace because it goes 1,000 points up in 5 days? I mean, I think, yeah, it will retrace. The market always retraces. It's just you can never tell when. If you have like unlimited drawdown, then like you could probably take a pretty virtually risk-free trade for a retracement down to some key levels. But like this could squeeze up to 27K before it does. You never know. Chauhan, I prefer horizontal lines. At least they respect price, not my imagination. Okay. Well, there we go. So your idea is horizontal lines. Okay, well, horizontal lines then. We achieve pretty much the same exact thing. So we broke above this resistance level here on gold and rejected this resistance here. So now it's either going to break through that or just full on reject and continue lower. But overall, trend is up for the shorter time frame. Longer time frame, trend is down. decade-long short squeeze. Everyone will be millionaires when this is done, yet still in poverty. Yeah, I mean, if we hit hyperinflation, then yeah, there's probably won't get a retracement. Most pro traders I've watched say there's a rule to follow, which is long in a bull and short in a bear market to stay on the safe side. Basically, going with the overall trend. Yeah, for sure. But again, depending on your drawdown, you gotta be careful longing if you're trying to long the tops. Just the past 5 days have been crazy. There's been like no pullbacks. If you have access to the 5-second chart, pick a candle with the highest volume, draw a range, and extend to the right or 1-minute candle, whichever you like. A 5-second chart with the, what the heck, 5-second candle? Okay. I got some voicemails. I keep getting freaking base phone calls. It's so annoying. Like I'm out of the military, but like their systems are like so terrible that they'll keep people on a call list indefinitely. I don't think they ever like check. Pretty sure the real rate of inflation is the percentage of the S&P moves each year. Nashman, are you happy with your new PC setup? Oh yeah, I love it. The new PC setup is awesome. Okay, that was some strength on the NASDAQ. It's looking like we're getting our first buy signal. If it does sit at that VWAP or get above it, that'll be our first buy signal. If it does reject here, then it's not a buy signal. Yeah, this PC is crazy. I don't know if you guys hear it in the background. I hope you don't. I hope you don't get a bunch of background noise, but it is like pretty loud. My mic got a little dusty. Okay, yeah, that's a buy signal on NASDAQ. I'm gonna keep holding short though. Yep, hour 15 to FOMC. Brace yourselves. You're in a bunch of market buys. Oh, anyways, I completely just forgot what I was even saying. Yeah, so I hope you guys don't hear the background noise because the computer is crazy loud. It's like an airplane. Well, not really, not that loud. But I got the Be Quiet case fans in it, which I think are like the coolest, like probably the best case fans you can get that keep the computer relatively quiet for the amount of cooling required for it. But it's like an air conditioner too. Like it keeps the computer very cool. It's got liquid cooling in there, all that kind of stuff. So I'm very happy with it. Is there any way I can add the sound you have when candles go up or down on TradingView? It's pretty cool. That's a feature of Financial Juice. So I don't think there are any free features to get that. That basically indicates large market orders coming in. And that's included with Financial Juice. I mean, if you're interested to get it, it comes with the live news, the audio news. I have a code that gets you 67% off indefinitely. So if you get it, like that discount stays. But it ends up, with the discount, it ends up being about $30 a month. Another voicemail, man. If you have TradingView, you can ask ChatGPT to create one. I was able to create a special indicator that does the audio alert you're looking for written in Pine. Oh, okay. I guess you could do it with Pine script. I guess you would just have to put in the variables. I don't even know what kind of variables you would put in there. But you would also need level 2 data for that too, I would assume. You'd need level 2 data. So I guess you would have to code in Pine script with level 2 data for like any time an order of over 10 contracts or 20 contracts or whatever comes in at a market order, that it makes a sound. So I guess that's how you could do it. Okay, rejection of VWAP there so far. Gold is bouncing. Would you look at that? It's right on the trend line. What the heck? Is that a coinky dink? Why is it on the trend line? Huh. Chauhan, what's going on here? What kind of coinky dink is that? What the heck? It respected a trend line? No way. You gotta be joshing me. Watch me eat my words and it just creates a bear flag and fails here. That'd be funny. It's your imagination, Pasha. Let's see. Pretty sure the noise is free with Financial Juice if you sign up with email. Oh, okay. Oh, yeah, you're right. You're right. It just might be delayed audio. That's what it is. Yeah, so you could actually get it free with sign up to Financial Juice. Yeah, I think it's just delayed. I think it might be delayed like 10 or 15 seconds. Something like that. So the news is delayed like 10, 15, maybe 30 seconds, and probably same with the sound then, I would assume. You got Financial Juice? Did not know that. I like to have crickets on. Yeah, Robert, it's the tick strike right underneath the streaming button. It shows tick strike, so just like set it to S&P. There's only 4 options. I think the premium tick strike, which is a separate subscription, which I guess if you want to get that subscription, you could probably use the discount code as well. It should give you a discount, I would assume. I don't have it myself, but Let's see here. How much is it? Oh, it's like the same price. Dang. That's expensive just for the sound. Yeah, anyways, you have 4 options. You have S&P 500, Euro, USD, oil, and Bitcoin. It's only 4 options. So I just set it to the S&P 500. Great imagination. You like snarky Pasha. Cody, Pasha, are you trading FOMC? If so, what is your strategy? Will you copy trade? Why did you stop showing your account P&Ls? Yeah, I forgot to restart my computer. I need to restart my computer to fix it. The OBS is like not working for some reason for the Ninja Trader showing it. I have it enabled, but it's not showing it. Last time I fixed it, I had to just restart, but I forgot to restart last night. Yo just got here. What are you trading? I'm trading NASDAQ and gold. Gold's failing a bit. Creating that. Getting very tight with that wedge. NASDAQ coming up to VWAP. Chauhan, one lucky bounce. And suddenly here's the trendline whisper. Nah, I'm just messing. Who's excited for FOMC? I have a good news strat. Oh, and Cody, for strategy, I don't really have an exact strategy like price levels or anything, but my thought process is that even with the greatest news for FOMC, I think we're gonna see like some volatility. So that's why I'm playing on the short side since we have been overextended. I am copy trading. So my strategy is basically, I guess this is the strategy. The strategy is basically to play for a quick sweep through some levels and then wait and see what happens afterward. Because I think that the market right now, over the past week, has really priced in perfection for FOMC. So with pricing in for perfection, any type of even slightly disappointing news or anything is going to send this down pretty fast. So that's just my thought process. I feel like it should be a very easy short. At least temporary short. Okay, gold's right back down there. So basically if gold breaks lower, it doesn't stay above this VWAP here, then I'll just stop out of this position. For a smaller loss, it was pretty low risk to reward. So risk to reward is about like 1 to 2.5 average if it comes up here. Even astrology has better hit rates than your trend lines. I mean, I don't use trend lines to trade. I just put it up. I just put up the trend line just to like so that you guys have a visual on the stream. That's it. The reason why I took this long is because it looks like 4K is being respected. That's all. I took this because of the 4K psychological level, not really. So I took this based on a horizontal level. Chauhan, horizontal. Can't argue with that because you said you do horizontal levels. Jonathan, I've been using a 2012 laptop with a 2nd gen Intel i5 for years, but recently upgraded to the Intel 14 gen i7 Dell desktop. It's a night and day difference. Oh yeah. Especially for for day trading, if you have a bunch of graphs and everything up. Oh man. Yeah, because my last computer, it's standing like right next to me right now still. But this previous computer, like I have had it for over a decade, and I upgraded components in it a while back. But that computer, like it ran good. It had good specs and everything. But the thing is, with running everything that I'm running, also live streaming takes up a bunch of computer power, computing power. So like live streaming and doing all this, it's a lot. So I would actually get a bunch of lag, especially when a bunch of orders would come in. My computer would just like freeze up slightly. So I was like, I definitely need to upgrade the setup. Yeah, Chauhan, true. You were calling the short yesterday. Leo. How long have you been in this trade? Like a couple hours now? Do you have a TP in mind? Yeah, I've been in this trade for a couple hours, and I didn't take profits down here. I think I might have taken... I took gold, actually. I had a gold short. Yeah, I had a gold short from up here, I think. And I took both of the... I took half of the position off, like around here. The other half down here. So I did the gold short that actually closed, and then this I opened up this morning, and I've just been holding it. But as for price target, I think I would be here. I'll go price target for. Let me check my other graph real quick. So I have the price targets on there a little better. Okay, so for price targets, I think, let's see. Okay, there it is. Okay. I have everything graphed out on Webull, by the way, because I hate Trade-of-8, setting up graphs in Trade-of-8. So the price targets, I would think overnight low or after hours low, which is 26,150 right here. That would be like TP1 for me, even though I do have partials before then. TP1 I would think is 26,150. That would be, I feel like that one's like guaranteed. Next level would be 26,100 approximately. Next would be 26K. And I think honestly, realistically, if this stays super bullish, I think the 26K or 26,050 approximately there, somewhere in here. I think this would be like the complete bottom if this stays like super bullish. So I'll be like watching very carefully how the market reacts when and if this does come down for a quick sweep. I'll be watching this level here most closely for whether I close the position instantly or if I actually hold and possibly try to get a sweep of Monday levels, which would be 25,800, 25,900, 25,800. The stars told me it took them 3 attempts though. Okay. Little consolidation there under VWAP. End of times. Yeah, true, Lynette. No, I appreciate you guys bouncing ideas. I appreciate the criticism too. I appreciate like you guys sharing your input and all that. Sebastian, thank you for the sub. Welcome to the channel. That 70-point dip isn't chaos. It's just the drum roll. Real chaos arrives in 2-3 days. Consider that the teaser trailer. Cody, so you're setting up for FOMC to dump? Not exactly to dump. Like I said, if it's gonna be like super bullish, I don't think it's just gonna straight up rocket. There's a possibility that like later, this is, like I said, this is priced to perfection right now for FOMC. Like this is absolutely priced to perfection for FOMC. So like if perfection happens and even more than that, we get ultra perfection that's not even expected, then maybe this does squeeze and like the shorts that entered all in here get squeezed so hard that it squeezes to like 26,500. That's possible. But I think what's more probable is that even perfection is called out, and with that perfection people are like, okay, time to take profits, and this sweeps to like the 26k level and then comes right back up, and we continue, you know, consolidating whatever, continuing the trend up, and that ends up locking in a higher low. So yeah, ultimately the setup is for a sweep of volatility to the downside. There's a possibility of a sweep up and then possible sell-off. But like overall, there will be volatility with FOMC, and probably very large volatility. Still over the high of day. One of us is very confused about the word chaos against. Pasha, did you hear about the hurricane in Jamaica? Yeah, I saw the news yesterday. Pretty insane. Okay, how's gold looking? Gold's not respecting the trend line. Oh no. See if that VWAP holds it though. A lot of red with the Mag 7, Netflix down too. Yeah. Yeah, a bit of red across the board, 100%. Nvidia pulled back to 205 per share and bounced to about 207.50. Broadcom keeping that bullish trend as well. Nvidia almost closed that overnight gap up. Okay. Meta looks to be selling off a little bit. Possibly making a higher low. Apple trended all the way up to VWAP. Amazon, a little bit of a selling channel, potentially sells off. Oracle looking kind of bullish after a morning sell-off. And then in Tesla testing 460 right now, right around VWAP. Possible continuation down. And Google, really big run up, just pulling back a little bit, potential just bullish pullback. Microsoft, after initial sell-off, is testing VWAP right now. So I mean, the NASDAQ could push upward here. We'll see. And then I may get stopped out on the gold position. Does look like it wants to go lower. So it's testing that level where it bounced right now. Perfect FOMC setups usually dump. That's market psychology for you. Vice versa always applies. So up or down, got it. When it's ultra perfect, odds lean down. Market loves punishing certainty. Yeah, I mean, I feel that way as well. But if everyone expects the dump, it will rip instead. FOMC trades feed on overconfidence, not direction. Yeah, fair. Still bearish on gold. Watching VWAP for now. Okay. Yeah, because you took the short at 40.11, right? So you're already almost 10 points. Okay, let's see if this is potential double bottom. That was a decent bounce. Decent bounce there. There's gold. 4003 bouncing. You're out of it, waiting to re-enter. Okay. Yeah, if it breaks below 4K, if it breaks below 4K, I would probably be looking for a short on it as well. But the reason why I'm like trying to scalp along on gold is because the NASDAQ and gold have been kind of inversely trending. So inverse gold and NASDAQ movements. Somewhat. Not 100%, but definitely a bit inversed. Okay, a little bit of a wedge forming here. Okay. Yes, thank you, Lynette. I'm not providing no financial. I'm not providing any financial advice. Do not copy anything I do. Because then, if you lose with me, you're gonna sue me. But then if you win with me, you're not gonna pay me a cut. Thank you. It's smarter to start building shorts gradually here. Position yourself ahead of FOMC with tight risk and solid reward potential. Chauhan, when you're saying tight risk, I think you'll get stopped out. If it ends up being like a really good short play with FOMC, when you're saying tight risk, I don't know what you mean by that, but if that means like setting a tight stop loss for the short, I think you'll probably get stopped out. There'll probably be a sweep. Because there's going to be volatility to both sides. Is that gold? This is gold right here, yeah. I'm swapping between gold and the NASDAQ. NASDAQ's wedging a little bit. Kind of starting to look a bit bullish. We did get a buy signal on this strong upswing above VWAP. So we'll see if this continues its bullish momentum. I'm still holding the short though. I'll be holding the short until FOMC. Gold's pushing up a little bit, a little bounce. How does gold look? Still have this selling pressure on gold. So it needs to break out. I don't know if it will. Also, Chauhan, if trend lines are not to be trusted, then why do we see selling pressure continuing lower, and buying pressure continuing higher, creating this wedge? Just a question. Why is it that sellers are coming in at lower prices? What horizontal lines could you use for this? They're just coming in, they're selling it at lower and lower prices. Buyers are buying at higher and higher prices. Ain't that interessante? In a short again at 0.8, just scalping. Okay. Good luck. This has gotten to a pretty tight wedge. It's tightened up a bit. So I feel like the scalps are a little bit risky here. It's either going to break to the upside or downside. There's not much consolidation room left here. Chauhan, you're not expecting a two-sided move? Likely an initial dump, then volatility consolidating at lower levels? FOMC reactions love trapping bottom buyers before stabilizing? Okay. I guess I wouldn't disagree with that then.
Surely expecting the result of the Fed reverse repo operation.
I would kind of think that it would be a double move because we already saw some initial selling here since open. I mean, we had the move up when open, but we've had some selling here. So there's definitely a lot of retail bears sitting at some of these levels. That's why I would think a double move would happen, because you could get an easy short squeeze up with a volume spike before dumping it. You get a lot of these shorts out of their positions. Same reason a Pisces is compassionate to the stars. EMA trader, you're adding to average down. Okay.
15 counterparties take 19.504 billion at the Fed reverse repo operation.
Yeah, if NASDAQ breaks out here, gold's probably going to dump since they're moving inversely. We're also sitting at a level of a potential breakout. So I would think a break of like 270, 275-ish. A break of that would be bullish on the NASDAQ. And it's probably going to move to the highs here. More recently, over the last couple of years, FOMC initial move usually gets faded, whatever side it moved first. That's textbook. Textbook after that, let's wait for Powell. Yeah. I think that might be pretty realistic here. That's why I gotta watch the drawdown and leverage, because there may be that opposite move. So I gotta make sure drawdown doesn't get hit. When you pull away using a 1-minute 20-day, this thing looks like it's rolling over. What, the NASDAQ? Momentum did kind of slow down a little bit. But I mean, it would make sense for momentum to slow down. It is overextended, and it's into FOMC. So it would make sense for it to slow down. But as far as for rolling over, like, man, anything could happen. This could be the mega squeeze of a century. Who knows? I hope Jerome Powell doesn't even cut rates. We're not near 2%. Job market is not as strong as once thought. Yeah, I agree with you, Lynette. I agree with you there. But if the jobs market doesn't look good, then cutting rates would be an effective way of helping the jobs market. But that would also increase the inflation risk. They have to balance the job market with inflation and all that stuff. They have to balance it all. So it's definitely a hard decision for them. But I would agree that no rate cuts or even a rate hike would probably be an appropriate move. Because Jerome Powell has stated that like for job levels, we were at like record employment rates, or record low unemployment rates. We were at like such low unemployment. So whenever Jerome Powell was keeping rates high, he was not worried about unemployment, because like we're at historic lows, So he was fine with unemployment getting higher. Unemployment like rose slightly, but it's nowhere near like a super like crazy high level. So like I don't think he would cut rates, to save unemployment. I would think, because for him unemployment is not like low enough to really be a concern. I think the inflation level is a little bit more concerning to him. So he would probably be willing to risk unemployment rising in order to tame down inflation. Okay. came down here and just barely tapped under this level. I'm surprised that didn't get a sweep there. There's a bit of a volume spike right here. NASDAQ starting to sell off. Just a little bit. If it sweeps these levels, I think gold bounces. I think gold bounces nicely. Once the move finishes, a clean trend line magically appears. Only the next leg starts and a brand new one replaces it. Endless geometry, zero consistency. I don't think there's any setup out there that's 100% consistent. That's just how it is. There's like no setup out there that's 100% consistent. Sounds a lot like your short bias if you say the market's going to dump 100 times. The one time
Sources
you're right,
say
so I
Germany
told you so.
examines option of nationalising Rosneft's local business in a backup plan.
I mean, I'm short the NASDAQ. I'm just inverse trading gold. I'm just doubling up on the gold long. I don't know if you're like short gold and the NASDAQ, Chauhan. Okay, that was a sweep there. Got 4 points out of that. Kind of being careful near VWAP. Yeah. I mean, that's not bad. You got the scalp. Of course, it's going to dump. If insiders had real buying intent, they'd have kept price pinned above VWAP. For what? For gold? Or for the NASDAQ? Because you were talking smack about this trend line on gold. I don't know why. The moment it slips below, it's not accumulation war, it's distribution in disguise. They don't want a bargain. Noted, learning a lot today. Leo, I wish the best of luck on your shorts. I really do. The market dumps, props to you. Yeah, I'm hoping the shorts play out. I was bullish most of the month. Yeah, I mean, it's been an insane run up, so it would make sense for a retracement. It would make sense, but that doesn't mean it doesn't short squeeze some people out. Look at this. Lower and lower sellers coming in on gold. I mean, I feel like I gotta even like move my stop a little bit lower in case this sweeps it. Maybe I risk 400. But what if it sweeps the 4K level?
Order filled.
Okay, we hit our partial on the NASDAQ. Waiting for the gold bounce. Nice. Hit our partial around here. When we have been straight up for a week, if you just keep calling tops, you'll be right very soon. Especially when you're not even defining what a dump is. I'm not directing that toward you, Pasha, but if you're a short as well, good luck. I don't trade FOMC, so I just watch. No, I gotcha. Yeah, I don't think it's going to be like a straight up like dump and turning bearish and trend reversal. I do think there will be that retracement before or during or after FOMC. I think we're due for a good retracement with some volatility. Too much for you to handle? Yeah. I mean, it does get scary, and then if you got the fundeds, you can't even trade through it either way. Okie dokie. So perfect. That rejected the exact level where it needed to. We needed it to on the NASDAQ, so it was about 270. And it rejected right before there. So that was a perfect rejection. As of right now, if it gets below 220-ish, that'd be a breakdown signal. Average move would be about 70 points, which would be a target of 26,150. Right to after hours lows. I guess that'd be yesterday. That would be right after hours low. 150 there. That'd be the average move on the breakdown signal. We also got a sell signal on that big red candle on the 1 minute. So it needs to get below 220 and stay below it. If it bounces there, then it may just wedge for a little bit. Range in this range for some time. Possibly create a lower high and then a higher low, lower high, higher low range in here before choosing a direction. Missed the put scalp. So NASDAQ fell down. Gold not looking very pretty. It's not wanting to break out here. So it's not inversely trending with the NASDAQ right now. Oh yeah, it's simpleton. I just read. I know that you're not direct into me. But even if you were, yeah, I don't get offended or anything. I'm just making sure that I try to read everybody's chat. Okay, that was a pretty fast
Stop
gold
filled.
drop there. Okay, we got stopped out on gold. Okay. Little sweep of the 4K. So I thought would happen, to be honest. Okay. Bounce on NASDAQ. Alright, let's erase these. Seems to be failing. So, now... Well, honestly, now we got only 30 minutes till FOMC. I don't think I want to short gold. If it does stay below 4K and retest 4K and goes down, I don't think I want to short gold. Because I would be a little bit worried with gold popping up with FOMC. I'd be a little worried with NASDAQ dumping and gold popping up, but you know, the opposite could happen too. If you're long gold, time to rethink unless you enjoy watching a majestic golden candle turn into a giant red hammer of regret. Okay, I'm hearing a lot of market sells. NASDAQ not moving too much though off of that. S&P is failing down though. See if the NASDAQ joins it. S&P's leading the move. Whoa, what was that? Oh, that was my mouse disconnecting somehow. Okay. It'll be interesting if gold ends up just sweeping the 4K level here like it did, and then actually breaking out. So I'll be watching that. I'll probably try to long gold here. It's unfortunate. My stop was pretty close, and it did sweep me out. You don't need much if you long one mini on gold. Oh, yeah. Yeah, I'm only doing micros, though, on gold. Even the micros, like, get you good moves. Ikno, thank you for the sub. Welcome to the channel. But Chowhan, what do you mean? Like, if you long on gold, so you're shorting gold and the NASDAQ together? You're shorting both? Wait, what? Okay, Chowhan, you're now contradicting what you just said. If you see a red candle, don't think you're late or miss the move. That's actually your invitation. The crowd panics, smart money enters. So now you're saying buy gold, basically? What is going on, Chowhan? I'm confused. Chauhan, you're confusing me. Oh, invitation to enter short. Okay. So, then with that logic, this big green candle is an invitation to long? I guess this is the invitation to long here. This is smart money entry. Short entry was 40, 30-ish area. You're in that? Nice. Yeah, that's about where I entered. Maybe like 40, 35. I forgot the exact spot. It's about where I entered as well. And I took that down to almost 4K. Do you have an ever CTF I can buy? You're heavy short on gold. It's lining up perfectly. Just keeping a light position on NASDAQ for now. Okay. Okay, this bounced exactly where we were expecting. If it was to get below this level right here, so it bounced exactly where bulls would want it to bounce. If it got below this level and stayed below, this would have been a bearish breakdown, and it would fail quite a bit down on the average move. So this is the exact spot where it would need to hold. So if it breaks below this wedge now, this is kind of like a wedge forming, maybe kind of like a megaphone even. Then it's a breakdown signal. Right now it's just a bit of a bounce, possibly going to be ranging and creating a big wedge here. Super, do you like trading through news? Not really, no. It's just with how the market has lined everything up, I want to trade through this news. But usually, no, I don't like trading through news. And you're usually not allowed to anyways. Do you guys look for ESG criteria on ETFs or don't care? I don't really know. By the way, guys, if you are thinking about loading up on Take Profit Trader evals or anything like that, we have till the end of this week, basically, to get to a level of referrals, and then we're able to get 50k evals. I figured out how to give away the evals for Take Profit Trader. So if we do get to that level, we'll be able to do Take Profit Trader eval giveaways. And I got an update on the eval giveaways for them. They make them completely zero fees for any of it. So if you get a free eval, you don't have to have an activation payment on them, which before you would have to do activation on them, which was kind of not a scam, but it wasn't really worth it. But yeah. If we get to that level, I'll be able to do 2 50k eval giveaways next month. If not, no worries. If we don't get to it, don't worries. Maybe we'll get to it next month, because it resets every month. Yo-Yo, I would join a giveaway, but I don't want to give my address and full name. Is there a possibility to just give the email? No, you have to give that information, because it's anything you get is taxable income, so they're gonna have to send you tax documents, and they need to make sure to have that information because they have to report it to the IRS. So if you end up trading a cash account or prop firms or any of that, like if it's a legitimate prop firm, they're going to need that information so they can do tax reporting. Dow's getting a clean sell-off, or has been getting a clean sell-off. Thank you. Mhm. Thank you. That's a clean higher high, not what bears want to see. Trap City, higher low. Clear higher high, what are you talking about? Oh, higher low. Okay, gotcha. That's not a clean higher low. So you're saying that, but that's not a clean higher low. This is a wedge. Because we had a high, lower high, lower high, lower high, lower low, and then a lower high, and then a higher low, and now possibly going to create a lower high. This is creating a wedge. So we're gonna go with
G7 to
the
announce
trend
critical
lines here.
minerals production alliance on Friday.
The trend lines that you hate so much. We got something like this going on here. Don't you dare draw it. We got something like this. And then the something like this is playing out on gold right now. So this trend line, a little bit messy, kind of got invalidated here with the sweep of the 4K. So now it's creating a potential well, it's just a wedge right here, but it's kind of like a selling channel. It did mess with that it did kind of fail that other trend
So
line,
in
so
15 minutes time
it's a
now,
bit of a
at the
selling
top of the
channel
hour, we
happening
see the
here.
release of the US interest rate decision, as
If
well
it
as the
continues
rate
down
statement.
this way, it
For the
failed
rate
this trend
decision,
line and
general
potentially
consensus
is
is
going to
for a
continue
25
failing
basis
lower.
point cut down to 4%.
If it if it
Ahead
breaks
of the
above,
FOMC
it probably
meeting
creates
this
a higher
month,
high.
then, a note from ING, who say that the US September inflation was softer than expected, rising spot 3% on the month and 3% on the year for headline, and spot 2% and 3% on the month and the year for core, relatively. They say the consensus forecast was for a spot 4% month-over-month headline print and a spot 3% month-over-month core. As such, ING see this as a green light for a 25 basis point Fed rate cut at this meeting, even though the core month-on-month rate continues to track above the 0.17% month-over-month rate that we need to average
Keeping
in
it
order to bring
modest,
the annual rates
39.55
of
is all you need.
inflation back down
Okay.
to 2%.
39.55. I feel like that's reasonable, yeah. I think that's possible. Okay, before we continue, we're doing a commercial break. I'm gonna get started on breakfast here. So I will be right back. YouTube Premium members, you don't even have to watch this ad. Be right back. Right. I'm gonna partake in some breakfast while watching these charts. Also got 12 minutes until FOMC. It's gonna get exciting. You eating cereal? Come on now, brother. We're talking breakfast burritos. No way we're doing empty calories. Come on now.
So in 10 minutes time now, at the top of the hour, we get the US interest rate decision, where the general consensus expects another 25 basis point cut to 4%. With this, we also get the FOMC rate statement. So some commentary from Bank of America ahead of the rate decision today. They say the Fed is expected to cut rates by 25 basis points and end balance sheet runoff at its October meeting. They say policymakers will likely acknowledge the recent economic resilience, but keep their focus on supporting the labor market. With limited official data due to the government shutdown and ongoing uncertainty around the employment trends, Powell is unlikely to give forward guidance beyond this meeting, reinforcing a cautious fly-by instruments approach.
Order filled.
Am I bullish or do I think it's priced in? I think it's priced in, yes. But I'm bullish long term. At current levels, I'm bearish. Did I check
So
on
we're now
stocks
5 minutes
recently?
away from the top of the hour, where we get the headline
Yeah, we
event
can do
for
a quick
today,
check.
the US interest rate decision, where the general consensus from the markets and analysts expect a 25 basis point cut to 4%. We also
Here we got
get the
Netflix,
FOMC rate statement.
Nvidia. Nvidia is still kind of trending up after hitting 205.
So one last note ahead of the
Broadcom
Fed rate
showing a
decision
little
today then from
weakness.
Credit Agricole. They say
Meta
the upcoming September FOMC meeting will draw significant attention,
showing a
particularly
little bit
due
of
to the
weakness
lack
as
of
well.
key economic data during
Apple,
the
nice
ongoing
push
government
up.
shutdown. Reports
Amazon
such as
showing
PCE,
weakness.
GDP, and employment costs will be delayed,
Oracle,
leaving only limited releases like consumer
possible
confidence and
breakout
regional
coming.
Fed surveys. The
Tesla
Fed is
just
expected, though,
ranging.
to deliver another 25 basis point
Google
rate cut at
bullish.
this meeting, keeping its guidance open-ended
Microsoft,
amid
pretty
uncertainty and
neutral
internal
/ bearish.
divergence on the policy outlook. Policymakers are likely to reiterate that rates are not on a preset course and that no risk-free path exists for monetary policy. Analysts argue that market expectations for rate cuts remain too aggressive, as the Fed will likely pause easing once inflation concerns reassert themselves later this year. Attention will turn to the Fed's balance sheet policy, with Fed Chair Powell hinting that quantitative tightening could end in the coming months. While a formal announcement may not come in October, recent money market pressures and increased use of repo facility suggest that quantitative tightening's end is near, possibly by December, after Powell lays the
Interesting.
groundwork at the next meeting.
That statement did not actually sound very bullish, guys. Let's see how the market reacts to that. Interesting. So, quantitative tightening. Wait, let me read what you said. He didn't say quasi. I expect Fed to cut 25 basis points and quantitative tightening, and I believe there's risk management exercise. I don't believe we will see descent on the hawkish side. To the hawkish side. Okay. Okay. This will be interesting. Never mind. See what happens here. That statement sounded interesting, though. Am I trading pro now? I'm doing evals, so I can trade through this. But I did like the statement. I think that was that JP Morgan or Jerome Powell? Oh, that was JP Morgan. But the statement of investors or the market, their expectations for rate cuts are too aggressive, basically. A little bit of mixed signals, yeah. Okay, 1 sec.
One minute remaining. I'll lead with the US interest rate decision.
Okay, what do we got? 1 minute? Less than a minute? 40 seconds? See what happens. Don't be surprised if we get a sweep to the upside. See, but he said ending quantitative tightening.
10 seconds.
But that's JP Morgan. That's just their expectations. They said they expect 25 basis point cut and to end quantitative tightening.
cut, 25 basis points cut, 25 basis point cut to 4% as expected. The Fed says
Okay.
Myron dissented in favor of a half-point cut once again. Says the Fed say they will stop shrinking the balance sheet on December the 1st. So again, Fed saying they will stop shrinking the balance sheet on December the 1st. Fed
Big
Schmidt
move
also
up.
dissented in favor of no rate change. So Fed policy, the Fed here say policy committee is attentive to risks on both sides of the dual mandate and judges downside risks to employment have risen. Inflation
Gold
has moved
swept a
up since
little
earlier in
bit.
the year and remains somewhat elevated. Uncertainty about the economic outlook remains elevated. Fed vote in favor of policy was 10-2, with again Myron preferring a half-point cut and Schmid preferring no cut. To conclude aggregate balance sheet drawdown on December 1st. So Fed they're saying beginning December 1st, it will roll over all maturing Treasury principal payments. US short-term interest rate futures fall after the Fed decision as traders pair bets on further Fed rate cuts.
Okay, gold coming down. Gold dropping hard. Okay. Well, good thing I wasn't still in the long on gold. Alright, so gold dropping. NASDAQ's kind of... sellers keeping it down. Okay, sweep on gold. It bounced right back up. I'm not even hearing, like, market buys and sells. Kind of nuts. Tick strike might be just, like, delayed. There we go, market buy, sell.
Treasuries extend
Sounds.
drop after the Fed cuts rate with 2 dissents.
Okay, big bounce on gold there. I mean, so far nothing happened. 50 points of range. Really nothing. So let's see what happens with Jerome coming up. Look at, okay, wow. The gold is breaking out to the upside now.
Order filled.
Okay, there's the little sweep down. Gold still chilling there. Okay, nice. NASDAQ dropping down. Needs to stay below this line. Either stay above this line or stay below this line. And that's the direction it goes. Gold, big range, but nothing really. Oh, there we go. Now we're hearing some market sells.
Voice news disconnected.
Wow, financial juice just disconnected voice news. I guess I gotta restart it. We must have like a rapid amount of information coming in right now. Financial juice is even lagging the website itself. Nothing burger still. A lot of volatility, nothing burger. We did hit one partial, but we still have quite a bit of leverage. So that partial is not going to save us much. This ends up trending the opposite way. Need this to break below 200 level. They were expecting and built in 0.25%, yeah. Voice news isn't even connecting anymore. Okay, Fed, beginning December 1st, we'll reinvest all mortgage-backed securities principal payments into treasury bills. Okay. Fed to conclude aggregate balance sheet drawdown on December 1st. Okay. Sorry, financial juice is not connecting to voice right now. Okay, both gold and NASDAQ are coming down. Come on, financial juice. Okay, we're connected. Okay, bounced. Wait, this is, let's see. Oh, they're doing their press conference in 23 minutes? Why do I not see this here? Oh, okay, yeah. Press conferences in 23 minutes. Okay, I forgot. So we still have a little bit of time till Mr. Powell comes up. So this was just the rate statement, the market's reaction so far. Okay, so probably be a little bit of volatility until we get there. Got stopped out in profits, no complaints there, re-entered again. Okay. You re-entered the gold short or the NASDAQ short? Which one did you re-enter? I feel like the gold short's kind of risky. I feel like the NASDAQ short's a little bit better. At this current level, though, it might not be worth it to enter. Gold, okay. NASDAQ holding small position, though. Okay, gold's popping back up. Yeah, they're not inversely trading anymore. As of right now. Small position until you see a green 1-minute candle. Okay. It's already printed 3 1-minute green candles. Oh, 5-minute candle. Okay, gotcha. Anytime you've shorted the Dow above 48,000 for a swing trade, you've done pretty well. Nice. Yeah, Dow had a nice downtrend today. Okay, well, NASDAQ printed a 5-minute green candle. What are you doing, Shahan? Yeah, the 200 level bounced. Didn't even sweep the low, the previous low. Trailing close, okay. Yeah, well, I guess the thing that we expected happened. A little bit of volatility. It's not as much as I would like there to be. It was about 90 points of range, which is like, I mean, that's decent. Definitely could have made a good trade in there. But it's not as much as I was at least hoping for. But yeah, kind of exactly as we expected. Big volatility. Well, as exactly how we expected if it was kind of like a nothing burger statement. Some volatility and then right back to where it really was. So not much of a change. We'll see if that changes with Powell presenting or speaking. Both trading exactly the same, gold and NASDAQ. I'm happy I got out of that gold long though. I technically got stopped out almost at the bottom of this candle, so I actually would have been able to close out green here. Whatever. If I would have moved it down here, I would have gotten stopped out. So I could have lost more.
US 10 to 30-year swap spreads dropped to session lows after the Fed.
Gold's holding that 4K though still, which I guess is okay. There it goes. Okay. It's broken below. I could lock in $100 here on the cash account. I'm trying to target 200 on this short. It has to sweep this intraday low. Down here would be $200. on the cash. You're adding 10Q shorts? Okay. Needs to stay below like 230-ish. Maybe 220 actually needs to stay below. 970 is next support. Oh, 970. Yeah. I mean, I got oh, are you talking about gold? 970? Gotcha. Okay, okay. Yeah. I thought you were talking about on the NQ. Because I was gonna say 970, like I got a bunch of partials going all the way down here, but like the chances of this happening are fairly low to actually get all of them. I just have them set up just in case. Okay, 13 minutes till we have that FOMC meeting. All Jerome Powell has to say is good afternoon. And then this skyrockets. Or it just dumps. We'll see. It'll be fun. Short every rise. Markets handing out free lower highs. Yeah, possibly. I will not be against scalping these though. Try to scalp that. You're short scalping every time gold comes up? Okay. Yeah, NASDAQ's bouncing with S&P pretty well while gold is staying down. Watch, he'll come out and say, nah, I was just kidding. We're gonna raise them a quarter. Holding long term, that ETF. Oh, the gold ETF. Lynette, got a feeling he's gonna be hawkish, and the dissent in the vote is telling. There were two dissents though. There was one calling for a half-point cut, and then or 50 basis point cut, and another one that was saying no cut. So it's pretty mixed. I mean, it's only two of them, but That's a mix there. So one more dovish, one more hawkish. But Jerome Powell's been hawkish like all throughout all this.
So we're now 10 minutes away from the bottom of the hour, where we get the FOMC press conference with Chair Powell. We have got the live video on the feed for those interested.
Okay. But he's been hawkish throughout everything. The only thing I could see is like if the administration just really, pressured him to the point where, who knows. If he got like super pressured, then what can you do about it? He got pressured during COVID. He could have gotten pressured again. When you're up in those kinds of places, it's like you gotta just worry about yourself and your family. Sometimes you can't make the right decisions always. That's why I don't want to get into politics.
Order filled.
If you start caring about the people, sometimes you don't live to tell the tale. Okay, I'm gonna lock in $100 here on the cash account. So it should fill me here very soon. 223. So I'm gonna just take that off on the cash account. It's not as much as I was hoping for, but I'll take it. Just 50 points with 1 micro. Okay, I think I'll pop up the live stream as well. So let's see here. Pop it out in another screen. So I'll do something like this. Okay, we got our order filled. $100 on the cash account. So it'd be pretty funny. He like appears here and then you just see this red candle go out of frame. Let's see what happens. Got about 7 minutes. Guess I'll leave this like this for now, and then we'll pop back over. Let's take a look at stocks on the charts. So let's take a look at NASDAQ first. So NASDAQ, the 15-minute moving averages turned bearish. Overall, starting to reject that, starting to curl over, holding that 200 level. A little bit there. But it's also sitting right at the hourly 21 EMA and 4-hour 9 EMA. So it's really gotta break that 200 level to start looking like actually bearish. Just as of right now, a lot of chop and slightly more bearish than bullish on the shorter time frames. Well, Pasha, you were right about the sell-off. I mean, not yet. I was
In
expecting
5 minutes
something a
time
bit
now at
more.
the bottom of the hour, we get the FOMC press conference with Chair Powell.
Here's gold.
We have posted
Gold's
the live
coming
video to
down
this on the
further.
feed.
I'm gonna restart Financial Juice because I'm getting like double voice there. Okay, let's go to stocks. So we got Microsoft. Really nothing. Google. Microsoft and Google, I guess they're looking maybe a little bit more bullish than bearish. Tesla, really chopping around that 460 level. So nothing to say there. Oracle, potentially bullish. Looks like it might be breaking out of it. Little selling channel there, tight one. Amazon, below view up, maybe coming up to test view up to continue down, but it's overall been pretty dang bullish. So we'll see. Really needs a lot of selling pressure to get bearish. Apple, looking pretty bullish as well. Is coming up to that all-time high / intraday high. So we'll see if that's going to be some resistance. It's got a little bit of resistance here, but this could just be a bull flag for me. Meta kind of got down below view up, but nothing really special. Could be curling over slightly. Could be curling over slightly. Maybe it gets some selling pressure to close this gap. Okay, Broadcom ultra bullish, but it did start selling off a little bit. So as right now, looking just a little bearish. Looks like a little selling channel happening here. Nvidia. Okay, Nvidia starting to curl over. There's a little channel coming up here, buying channel. Starting to curl over, is failing it. So we'll see if it can break below this 205 level. That's going to be pretty important for bringing the entire NASDAQ down. Netflix, a little bounce here. That's about it. Okay, we got 3 minutes. 3 minutes left. Okay. Three minutes left. Let's see what happens. You're long on NASDAQ. Let's see what happens. Oof. Okay. Good luck. If it pops up, I would take profits quick. In case it's a sweep. Would have thought that we would have tested that 200 level in that chop, honestly. I mean, we kind of did. It bounced off the 200 level. EMA trader got 700 today, 600 more to go past this test account. Nice. Do you know how long Powell will be on? I have no idea. No idea how long he'll be on, but I know he will be on in 2 minutes. Jonathan, it's going to be really interesting to see what the NASDAQ does. Oh yeah, 100%. Good luck. Tracy can't wait to gamble this. Well, stay safe out there. Be careful. What the heck? There's just a random... Did you guys see that? There's just a random crane that came through the video. What was that?
Shortly expecting the start of the FOMC press conference.
Into oil. Your guess is he's going to be on for 1 hour? Dang, does he really speak that long? Interesting. Why wait? Full port? EMA trader, I'm not trading while he's on. You want to wait until the dust settles? That's probably smart. That's probably smart. Okay, gold. First big direction of the market is usually a fake move at FOMC. Yeah, I guess so. Okay, here we go.
And Powell has
I'm gonna
started
pause
the
the
press
music.
conference.
Order
Look
filled.
at that dude. He's such a boss.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained
Powell
available
says
suggest
data
that the
available
outlook for
suggests the outlook for employment and inflation
has
not
not
Here, I'll
changed
pause this.
much since the
our
last
meeting
meeting.
in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about
Pretty
monetary
lame
policy
FOMC.
after briefly reviewing economic
Red
developments.
tie all in.
Available indicators suggest that economic activity has been expanding at a moderate pace.
Dovish.
GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year.
Quick, what do we do with
Data
the purple
available
tie?
prior to the shutdown show that growth in economic activity
All in on a-
may be on a somewhat firmer trajectory than
I don't
expected.
know.
Primarily
All in on a
reflecting
breakfast
stronger
burrito?
Consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing
Yeah, it
likely
is
reflects
super
a
flat.
decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand
It was
has clearly
purple last
softened
time and the
as
market
well.
was nuts. Nuts
Although
in what
official
way?
employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile
Need a
food and energy
burrito?
categories,
Heck
core
yeah.
PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year
Robert.
on news about tariffs, as reflected
popping
in
up
both
a little
market
bit.
and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
Market seems
At today's
uninterested.
meeting, the committee
Usually
decided to lower
there
the
would be
target
tons of
range for the
whipsaws by
federal
now.
funds rate by a 1/4 percentage
Yeah, I
point
mean
to
earnings after hours
3
today are
quarters
gonna
to
move
4%.
a lot. They're gonna move the market
Higher
even more
tariffs
than
are pushing up
FOMC.
prices in some categories of goods, resulting in higher
Could be waiting
overall
for earnings,
inflation.
honestly.
A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to
John, you guys
inflation are
stop.
tilted to the upside and risks to employment to the downside. A
Bless you.
challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate
I'm
at
copy
this
trading
meeting to
5
take
accounts.
another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance
Nice.
of monetary
There's our
policy
partial.
based on the incoming data.
Nice,
the evolving
nice,
outlook,
nice,
and the
nice.
balance
There
of
we go.
risks.
There we
We
go.
continue to face two-sided
Keep it
risks.
coming.
In the committee's discussions at this meeting,
That
there were
hit
strongly
26,150
differing
on the
views about how to
dot.
proceed in
26,150
December.
on
A
the
further
dot. It
reduction
needs to
in the
break
policy
below.
rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings
Good.
as of December 1.
It's below 150.
Our
Needs to stay
long-stated
below,
plan
get below.
has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions.
What's
Signs
gold
have
doing?
clearly
Okay,
emerged
gold
that
dumped
we
as
have
well.
reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that
Good.
we've been shrinking our balance sheet,
Keep it
our
going.
securities holdings have declined by $2.2 trillion. As a share of nominal GDP,
I'm
our
in.
balance
I'm
sheet
in
has
the
fallen from 35%
NASDAQ
to
short
about
right now.
21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to
115
move
bounce
gradually
there.
lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation
Still in got
sustainably to our
and
2%
gold.
goal,
Got your
and
first
keeping
target
longer-term
39.55.
inflation
Nice.
expectations well anchored. Our success in delivering on these goals matters to all Americans. We
Sold
understand
calls
that our
on
actions
NDX
affect
for
communities,
$1
families, and
times
businesses
10
across
contracts.
the
It's
country.
in the pocket.
Everything
Nice.
we do is in service to our public mission. We at the Fed will do everything we can to
Like you
achieve
sold
our
as in,
maximum
like,
employment
covered-
and price
covered
stability
calls, right?
goals. Thank you.
And it's a
I
good
look forward to your questions.
Very nice. Keep it coming. Keep it coming. Break that 26,100, please.
Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that
106
is
bounced.
that we haven't made a decision about December.
Needs to get
And,
below
we're gonna be
100
looking at
now.
the data that we
26,100.
have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At
Testing
what point
100
do
now.
you,
Nice.
conclude that
Nice.
you've taken
There we
out
go. We're
enough
starting
reserves?
to
Are you
take
looking
our
for some kind
meaningful-
of improvement
Our
in the
meaningful
outlook?
partials.
Or could this
Next
unfold
is
along the lines of last year,
26,026.
where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation.
I think I might take a
And
partial
then
at
that has changed now. And as we
26,050
saw
actually as well.
Particularly after the July meeting, we saw the downward revisions in job creation. we saw a very different picture of the labor market, and it suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Invitation's still open.
Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the
Wish you held your
investments
put.
we're seeing in
Yeah.
AI and some of
They shook out the shorts there a little bit with this move here, I guess.
related to the AI boom? Thank you.
You know, I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor.
Nice.
I
Next
don't think for
partial
anybody.
filled.
You know, I guess I
Think
would
I
say it this
moved-
way. Once again, I would just
Probably
point
moved
out
this
that we
one
have
down.
the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, you know, some will be more
Yeah, I've been
averse
in the
to
short. I'm currently
inflation
holding the short.
overruns, and some will be more
I already
averse to
took 2 partials
underruns
off,
of employment.
or 3
And
partials.
so you put that together.
So half of
and
my
as you can
position is
see
off
from
right
the
now already.
SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views, and they were reflected
be
in
nice.
strongly differing views.
I mean, I
in
took
today's meetings,
small
as I pointed
positions, so
out
I'm
in
not
my
even
remarks.
making much here
And that's
on
what
this
leads
short.
me to say that, that we haven't made a decision about December. You know, I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Bali,
Just a quick follow-up
that's
on
exactly
Pasha.
why
How
the
much
drop
of the,
here, because
the
everybody already
different
knew that
impressions
the
we've seen in
25
money
basis
markets
point cut would
related to
happen.
US
What he
Treasury
mentioned is
issue
that
and more
December,
short-term
he's
debt.
not guaranteeing
Yeah,
a
that could
cut,
be one of the
but the market
factors,
is
but
pricing in
the
2
reality
cuts.
is
They're
we've
pricing
seen,
in a
the
December
things
cut
that
as
we've
well.
seen,
And he
higher
said,
repo rates and federal funds rate moving up. These
we
are
are
the
far
very things
from
that
a
we-
December cut.
that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a little bit or a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at
okay,
that
there's
place.
a bounce.
The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice. And so there's not
Order
a lot of
filled.
benefit to be holding on to get the last few dollars because, again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to
You're
adapt.
waiting for him to stop talking before going long? All right. Good luck.
Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly
filled.
play into our decisions going
Nice.
forward.
Took a quick
So
scalp
we,
there.
we do have, we get some
About-
data. The labor market is a place where we get, for
That was about a
example, we get the
70-point
state-level
scalp.
data on initial claims, which
Only
are
one micro,
sending
though.
sort of a signal of more of the same. We also get job openings, and we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing
Order
maybe
filled.
continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown
Trying to
lasts
take a
a while longer, and you
60-point
don't have
scalp
the
here.
data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's the meeting's I guess 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving, but we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views?
These
Was this
algos
a
are
close
relentless.
call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had 2 dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop at the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't.
Do you
make
think it'll
decisions
drop
about this
sooner today?
but we did
It already
talk
dropped,
today
brother. What are you talking
the
about?
composition of the balance sheet, and there's a desire that the balance sheet be. Right now, we're.
I don't know if
it's
it continues
got a lot
dropping more.
duration
It got
than the
to
outstanding
26,050
universal
and
Treasury
bounced
securities.
so far.
And we want to move to a place where we're closer to that duration.
It already
That'll take
hit
some
2 over
time.
profit
We haven't made a
targets.
decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually.
Yeah, relative to
I don't know if you'll
advance,
notice it
100
in
points
market
is nothing.
conditions,
You're right.
But
That's why I'm
the
holding.
direction of things.
Holding here.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs.
Do you think I'll go to 25,500?
Compared to a longer
Not
run
today.
trend of very, very
Probably
mild
not today.
deflation in goods.
Will it
So
go
that's
there
moving
to
inflation
that
up. On
within the
other
next
side of
couple
that,
of weeks? It's
good
possible,
news,
yeah, but
the
it is very
housing
bullish
services
so far.
inflation has been
Still.
coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing
Gap
services.
fill, yeah. I think
And that's
there's
kind of
a
been
gap
moving
fill. It will happen
sideways,
at some point. It just
over
who
the
knows
last few
how
months,
long it
but
takes.
A significant part of that is non-market services, and we don't take a lot of signal.
NASDAQ
about
has
the
been
tightness of the
in
economy
need of
from
a,
that. So if you add all that up, a couple things to say. One is that inflation
Has been in
away from
need of,
tariffs is
what's it
actually
called?
not so far from our 2% goal.
A pullback,
we
basically.
estimate,
Order
people have
filled.
different estimates of what that is, but it might be, 5 or 6 tenths, and so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about
New
tariff
candle in
inflation
2
is
seconds, okay.
the base case is that it will
Yeah, what's
come,
happening? Why does everything
and
just fall down, including
it probably will
Bitcoin?
increase further.
Because people priced in
But it is
perfection.
that it will be a one-time
Pricing
increase.
into
And,
two cuts
we've been very
this year.
focused for all
Jerome
of this
Powell
year
did say
at
that
making sure
December
that
cut
that's the case,
is
and thinking carefully about
definitely not
the,
guaranteed.
what are the
So,
pathways
market
through which it could
reacted.
become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in
That's just
services
liquidity getting
inflation,
vacuumed.
what are some of the
Everything
things that
falls
the
when the
Fed
tide
could
goes
do
out.
to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
15-minute orb
stubborn
hit the
services inflation that
TP10.
you
That's
Services
crazy.
inflation, yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that.
But the
also
price
just,
is going
we
back
think
up again?
policy is
Yeah.
still modestly restrictive in my telling.
See what happens here.
That's the kind of thing that should lead to a gradually cooling
Came
economy.
up to
That's one of the reasons you see a gradually
26,200,
cooling labor
rejected
market,
that level.
is because,
See if it comes back down.
Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all. And could further rate cuts at this point perhaps fuel an excess level of
Market
investment
moves first, then
there, or,
everyone scrambles to invent a
market
reason for it.
bubbles? How is the Fed thinking about that?
So I don't
know about that,
think
Jahan.
that the you're
Do you
right.
think it'll
There's
continue
there are a
to
lot
bullish,
of
or
data
will it
centers
go
being built
back down because
and
of the
other
cut?
investments being made
I don't know,
around
Aziz.
the country and around the world.
It's impossible to predict it.
Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run. It's longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names.
If that double
Price
bottom
stats,
comes with real volume
Adobe
and follow through,
others,
maybe trail stops.
and-
If it's
and,
just two
for
sad
wage
bounces on low
inflation,
volume, or
there's
like
ADP
drop in
data.
book lower on gold. Okay.
On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the beige book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy.
Do you think the buying power now is agencies or individuals? It's both.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about a continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys of the beige book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that.
You invested $50K on the previous
that you would say
previous
we really can't
downturn,
see,
even
so
though it's on
let's slow
profits. You
down.
hope it continues moving up.
As a follow-up, in the debate in this meeting,
Statistically, we're looking
we
at some
saw
back
recently,
tests.
some pretty big
Statistically
layoff
speaking,
announcements coming
with
from
how the
Amazon and
market
others.
moved up
Wondering
like
if that
crazy,
figured into the discussion at
statistically
all,
in
and
one
you're
year
starting to
they
see
the
this
market
tension
should be
between
very
growth
green.
and employment starting to be resolved,
That's based on the past
to
like
the
50
detriment of
years
employment.
averages.
And secondly,
When the
some
market
of the
has
stresses starting to appear
acted
in
the way that it
bottom
has the
spur
past
of
couple
decay,
weeks.
as they call it, household.
So like long term, you're
premiums are
good,
gonna be
most likely.
possibly be going up quite substantially.
But that
things
doesn't
like
mean
that.
there
Has
won't
that
be some
started
really
to
big
become a factor in
pullbacks.
your
So
policy
just be ready for that.
Those are both things that we're watching very, very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully, and yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully.
So far rejected
But again,
26 to
don't see it
25.
yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are, if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that
So because
consumers
a
at the lower
big
end are
pullback already
struggling and
happened
buying
at
less
the
and
start
shifting
of
to lower cost
2025,
products,
there will be no
but that
big
at the top,
pullback
people
that
are
will happen
spending
soon.
at the higher
No,
end
I'm
income
saying
and wealth, and
I'm
so
saying
you
that there most
much,
likely will be
much,
pullbacks, but based
anecdotal
on
data on that.
historic
And so we think there's something there.
movements, how the market has moved. Like previous times when the market has moved the way that it has moved to the past couple weeks
Mr. Chairman, I want to take another
and
crack
months.
at the further
The year ahead is very green,
far from it. So
but there will
if a
still be
cut might
pullbacks.
not be
The
on
market will
table
always have
for
pullbacks.
December because of lack of data,
I'm just saying
what
that
is the other
there's a
concerns that
high
stem from?
probability chance that you will
So if it's not
make
lack of
more
data,
profit than you've
as
made
there
right
is in
now
December,
at the end
is
of next
not a
year.
foregone conclusion. What other
But that's
things
just
could be
based
the
on how the
concern?
market has
Well,
moved previously.
perspectives on
That doesn't
people on the
guarantee
committee
that will
that,
actually
We've
happen.
now moved 150
Who knows? We could
basis
go into a
points,
recession all of a
and
sudden,
we're down into
and then
you know,
the
you're
market
into
dumps.
that range between 3 and 4.
Nobody
where
can really
most
tell the future.
Many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people
Going
on
down
the
again,
committee who
adding.
have
Okay.
higher
Yeah, I already added
estimates of the neutral
two
rate.
contracts here.
You can
Just
argue
waiting.
these positions since it can't be directly
I'm not going to add
observed,
anymore.
the neutral rate. So, you know, I think for some part of the committee, you know, it's time to maybe take a step back and see whether there really are downside risks to the labor
MicroStrategy
market,
taking a
or
beating.
see whether in fact the growth
Yeah, I'm not
the
surprised.
stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, you know, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
And so on that division, then you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing.
Can we take
to
trades and pro accounts now? Yeah, I believe you're good to take trades in the pro account.
We have differences on how to do that, and as I mentioned, some of that is different forecasts.
Or actually,
but a lot of it
before
is
you take a
also,
trade, let me just verify.
Different risk aversions to the different variables,
Calendar.
which is common through all Federal Reserves.
FOMC statement.
People just have different risk tolerances. Let's
Okay,
say.
so
that
yeah, the
means
only
people with
event
disparate
forbidden
views,
from
you
being
will know
traded
that from
is 2
the
p.m.
speeches you've been
Eastern
listening to
Standard
from my
Time.
colleagues.
So
And,
whenever Powell
and so
came
we're in a
out and
place
everything,
now
you
where
were
we
able
have,
to
in
be in a
fact,
trade.
cut
You
2
are
more
allowed to
times.
trade that.
And,
It's
you know,
just
now
the
we're 150
FOMC
basis points
statement that is
closer to
forbidden.
neutral, wherever that may
So
be,
yeah,
than
this
we were a
entire
year
time
ago.
you've been able to
And
trade.
so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect.
And that's
in the
Take
minutes.
Profit Trader, by the way. I don't know about
I'm just telling
other
you that's
the
what
other
happened.
prop
Order
firms.
filled.
Elizabeth. Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration.
Do you think the
and has been
recession,
accelerated
like
now.
Big Depression, can
So,
happen again?
A big part
Yeah,
of
it's
the whole
possible.
story is that supply side
Some
story.
people
Okay.
have
In addition, labor demand has
brought
declined,
reasons as to
and
why
labor-
they think
so
that
labor-
the next
unemployment
recession
rate
could
has
be
gone
as bad
down,
as the
meaning that
Great
demand for
Depression.
workers has gone down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand? And and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to zero. So maximum employment doesn't, on a sustainable basis, doesn't, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools. But others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases.
I know I'm
on
not
particular
playing a double
product that's
bottom.
Tariffed.
We'll see
But
what happens, though.
overall, these are fairly modest. I think some projections go where 2.8%
Even though there's stock
inflation,
indices
you might
like
get
the
2 or
Aussie
3 more
200,
tenths or
UK
4 more
100 got
tenths maybe.
affected on that
But then,
market, literally,
as all of the tariffs
outside
are
of the
in,
US. Yeah,
they
the US
stop
market
generating
affects
inflation.
everybody.
You've had a one-time price increase. As long as you're not, at least this is the theory. This is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level, and then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than
NASDAQ's
they were.
price
And it takes
action
some
is
time for that
confusing right
effect
now.
to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Maybe.
Michael Pickey from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued?
It's technically still
at this
bearish.
point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable and whether it could withstand shocks, right? So, banks are well capitalized, while some households
seriously
are
defending.
clearly under stress. In
Yeah.
the aggregate, households are in good shape financially, relatively.
It'll be
relatively
interesting to see
manageable,
if sellers give
levels of
up or
debt
buyers give up.
at the lower income spectrum.
One
we
or
are
the
seeing
other
rising
will
defaults,
happen.
particularly around
We'll
subprime
move
auto, but nonetheless,
to
in
a
the
certain
aggregate, pretty good.
one or the other direction,
And,
probably pretty
you don't
violently.
So you don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI, of the data center story. I think, people think they're great economics in building these data centers, and they're making a lot of money building them.
Was
and
he just
they think
choking?
they have very high present value and all that sort of thing. It's not really about. It's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring. And that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that.
Do you think I'm good if I were to hold my 50K investment for the next 6 months?
Assessment that we can make.
I can't say either way, brother. If I were to say either way, that would be personal financial advice. You could sue me for it.
That's why we're going. That's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico.
I'd say do your own research and make your own decision on that.
The economic growth that we've been seeing is fed by investments in AI. So how worried
Don't
are you
invest
about
anything you're
what
not
a
willing to
sudden
lose.
contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s?
Unless
how
there's
you
a
might,
bombshell feels
approach
very
what's
strong.
happening right now?
Maybe.
This is different in the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that, and has been growing, and has defied a lot of, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers, or maybe skewed that way. But the consumer is spending, and that's
In a range playing the Powell orb.
What's going on in the economy, substantially bigger than
The Powell orb,
AI.
I like
You
that.
could point to growth. I mean, actually, you may be growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need.
You're
for
just
new
asking my
jobs
opinion
because
for swing
there's-
position.
There isn't this.
Yeah, I
flow
can't give you that, brother.
Into the pool.
If
of
I were
labor,
to say
where
generally
people need
to the
jobs,
entire
because there aren't those
stream,
people now. So there's not
then it wouldn't
a
be
supply of
personalized
workers
financial
showing
advice,
for
and there's
growth.
nothing
In
that
addition,
you would be able to
demand has also gone down,
do
and so
legally
has,
against me.
labor
But
force
if you're
participation has
asking me
declined, which is
directly and
more
I'm
of a
answering
sign,
you directly, that
in
is
this case,
personalized financial advice,
of demand as well as
of
trend.
which I'm
So
not.
I think you're seeing some softening.
I don't know
The
if I'm still
economy's
registered
growing at
as a
slower rate
financial
than
advisor.
2.4% last year. We think
But
it'll
I
be
would
6%
have
this year.
legal
It could have
troubles,
been a couple of
high
digits
chance of
higher
legal
if not for
troubles
the
giving
shutdown.
personalized
And of course,
financial
that would
advice.
reverse. But you still got the economy growing.
So,
at a
like I
moderate
said,
pace.
this is to the entire stream, not to any individual. Based on what the market has done in the past couple of weeks, couple of months, the past times in the past, in the past like 50 years, when the market has moved this way, the next year has been extremely bullish, like 9 out of 10 times.
Because of uncertainty.
So that's
Yes.
just how the historic
We'll know when we face that question, if we
stock
face
market
that
has
question.
moved based on
It'll probably be
movements that
argued
we've
both
seen
ways,
recently.
Right? But I've said a couple times here that
So if it's
if
the
you-
same type of
if
movement,
you really aren't getting
the
information, you
market,
really don't know,
and we have
and the
about the
economy
same
looks like
chance
it's
of these
solid and
movements
stable and
happening
hasn't
again,
really
then there's
changed,
probably about a
there will
90%
be an
chance that the
argument.
market's going to be
I don't know
strong
how
green
persuasive it will be, but
into
there will
next
be an
year
argument that,
and by the end of next year.
You slow down when you can't see as far ahead. Others may argue, I'm not sure where this.
I just
argument
revenge
comes, but you're
traded my
perfectly right, that you could
eval
also argue, well,
from down
things
1K to
haven't
up
really
19
changed,
bucks.
But you might not know that.
I guess
So
not bad.
I don't know whether we'll face this or not.
Yes,
I
not
hope
bad.
we don't. I hope by the time of the December meeting, we're getting.
What's
a
up? What's
better
up,
flow of data.
Laptive
But if
Finance?
we're going to have to do our job.
Let's get
one way or
another
the other.
50 basis points in December.
just wanted to ask
Yeah,
a
it sounds
Greg
like it's
question. I think several
almost
years ago, you
0%
said the overall
chance
amount of
based
capital
on
in
what
the
Jerome
system
Powell's
is about
saying.
right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think.
Sellers
among
are
the
trying to keep it below
agencies,
26,200,
and I don't want to get ahead
but
of
buyers
those
are
discussions. I
are
continue
really
to think
keeping
that
it
the
up.
level of capital, when I said that in 2020,
This is going to
was
get
about
violent
right.
potentially
And
to
of
the
course, there's
upside if
been
sellers give up
much
here.
capital added since then through various mechanisms. But I look forward to.
There we go, Chauhan
I know
with the
those discussions
personalized
are really
financial
just getting
advice.
going. They haven't come to the point where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor
So
market?
we do not see
Brian Chung,
the weakness, as you put it, the weakness in the
NBC
job market
News.
accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can
Let's see
accumulate them
here.
and get the national number. And there's really, no story. You can look at the numbers. Same thing with the job
here's
openings we get
gold.
from Indeed. There's just no story over the last 4 weeks. It's kind of stable.
Here's
So you don't
NASDAQ.
see anything that says that the job market is, or really any part of the economy is
Here's
making a
S&P.
significant deterioration. Don't see that. You see more things like I mentioned, though, which is you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers, the layoff
Yeah, I
numbers.
feel like we
have
need
not
some
gone
more
up,
downside.
But job creation is very low.
Barely a move at all.
And the job finding rate for people who are
I mean, that's
unemployed
almost
is
300
very
points
low.
from the top, but
the unemployment rate is very low as well. 4.3% is
We'll
a
see, I
low
guess.
unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular
That we're
section
thinking
of
of?
the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years
Okay, I'll be right back, guys.
Of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, yeah, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable, those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's what I can say.
My prayer life.
Thank you.
Can I trade TPT Pro now? Yeah. So this entire time that Jerome Powell was speaking, you were able to trade your TPT Pro.
You now had dissents in 3 consecutive
It was
FOMC
just
meetings, but in this meeting you had dissents going in
at
both
2 p.m.
directions.
Eastern
You just
time,
mentioned there's
whenever
strongest
the
movement in future
rate
path rate
decision
cuts.
was released, you
Have these
weren't able
disagreements
to trade
complicated
the
your
like
role
couple
presiding
minutes
over the
between
FOMC
those
meetings?
release
And if
between
so,
that
how?
release.
I wouldn't say that, no. I think you...
Right now,
have to
this
take that
entire
comps,
move,
and what
all
comes right
all of
now
this that's
is,
been happening,
pretty challenging
you are
situation
allowed
where
to trade.
We have, first
So
of all, we have 4.3% unemployment. We have an economy that's growing.
all of this you are
close
allowed
to
to trade.
2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and, as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this. And just
Maybe
wanna
I
do
don't
what's
scalp
right for the
anymore.
American people, but they have
I
different
just
views on
wait
what that
through
is.
on this.
And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time. And
This is
I
a
believe we'll get
potential
through
bear
this,
flag
and
that's formed.
I think we've done
So it's
sort of
either
the
going to
right thing
fail
so far
and
this year. I
continue
think
up,
it was appropriate for
or
us
it's
to be
going to
careful
play
about
out
this.
and it's going to dump
I
here.
think
I think
it would
taking
not be
scalps here is a little
appropriate to
bit
just
risky
ignore
now
or assume
because
away
I'm trying to
the
target like
inflation
50
issue. At the
point
same time, I
scalps.
think the risk of higher, more persistent inflation has
On a
declined
pop-up, I could,
significantly
though.
since April. And
There's a pop-up.
if we do wind
Okay,
up
right there I
resuming
can.
rate cuts at some point, we will at some point. I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, quite challenging circumstances and doing the best we can.
Chauhan, that's not a flag.
Go to Jennifer for the last question.
Okay.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when
max
we see
50%
one
retracement for a
cockroach,
flag.
there may be more
I guess that's
likely.
fair.
I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
So, we're obviously, we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile credit institutions having significant losses, and some of those losses are now showing up on the books of banks. We're looking at it carefully. We're paying close attention.
That's
I
interesting.
don't see at this point a broader credit issue. It doesn't seem to be something that has very broad application across financial institutions. But we're going to be monitoring this quite carefully and making sure that is the case.
And then separately, many, you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing to spend with the lower income pulling back. How much of consumer spending continuing hinges on the stock market remaining strong? In some odd way, does the market help keep the economy buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, the stock market, it would affect spending if the stock market went down, but it wouldn't drop sharply unless there were quite a sharp drop in the stock market. people at the lower end of income and wealth have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now. But and you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll dollar for dollar stop consumption, because that wouldn't be the case.
Simpleton, your patience is inspiring. I don't know about that. Do you think liquidity map is important? Yeah, probably somewhat. Cool, the event has now ended. Okay, now let's see the market just launch up. Okay, well, pretty much nothing really happened. We got a 200-point drop, and then this thing came right back up, huh? Cody, are you still shorting? Yeah, I'm holding it. I did take a lot of partials and a lot of scalps in here. So I'm gonna keep holding it. See what happens. Agreed. When I want to go flat ass, what would Pasha do and hold? Dude's been holding a position for like 3 hours. Up 5,200 across 5 Apex accounts. Nice. Yeah, that's awesome. Trading and in chat. Or it's only important in Bitcoin. I mean, if you know where liquidity is sitting, I get, like, it is something that people pay attention to. I don't really pay attention to it, but you definitely can pay attention to it. Okay, let's do our day trading playlist. Okay, this is not allowed to stay above 220, or else that would be a breakout signal. Trading funded is totally a different emotion game. Yeah, trading evals is like much more easy. Once you get to funded, you have to take profits. I would not be trading like this on a funded, or at least I would hope I wouldn't be. You did hold for the big first drop for profit. Will the earnings report make the market go crazy? If so, what time? Yeah, I think the earnings report might actually be what moves this market like insanely. I am surprised that FOMC didn't move it that much. It was only a 200-point drop, after a crazy move up. I was hoping for like a full liquidity sweep down. I mean, we may still see it. Who knows? Maybe market digests a little bit what was said, and maybe lock in some profit taking. We'll see. But there is definitely potential for the earnings coming up in after hours to move the market actually like a lot. Not like FOMC kind of barely moved it. I mean, this is still like a pretty big move from the tippy top here. This is almost 300 points of movement. But like I was expecting quite a bit more, just because we've been so overextended. I thought this would cascade into some selling a lot quicker. But for earnings time, it's going to be 5 minutes after the market closes. So if we do continue to look slightly weak, I may close. If we look slightly weak, because I don't want this to like, be a little downtrend and then I hold into after hours and then earnings launches it. But if this kind of stays up here, I kind of don't mind holding the short into after hours. and to see how the market reacts off earnings, if they, you know, kind of keep the price up there. So I'll be thinking of the inverse for earnings. But yeah, it'll be 5 minutes after market closes. So in just about 35 minutes, we're going to have two really big earnings releases. Two really big ones. Or maybe even three. Let me reset. Yeah, three. Meta, Microsoft, and Alphabet, Google. So we will have some really big earnings. And yeah, Google's at all-time highs. So it may get a pullback. Microsoft, I think, was a little bearish today. Let's see here. Microsoft could launch. It did double top at all-time high. It could launch and break through that. Meta could launch and break through its all-time high. It's been in a little bit of a selling channel. But Google did hit its all-time high today, so we'll see. Maybe that one. And Google's been rallying like crazy, so maybe Google has a little bit of profit taken on it. Even though, like I've said before on stream, you know, many days before, Google, I think, is one of the most undervalued Max 7 stocks. So I think it's pretty much at fair value right now. A lot of the Mag 7 stocks, I believe, are overvalued. Meta is probably the only other one I would say is pretty close to fair value, just because their financials are so strong. The rest of them, I think they're a bit overvalued. So I wouldn't be surprised if Google continues to rocket after earnings, but we'll see. So yeah, we got 29 minutes till market close. And we'll just be holding. I was able to hit that quick scalp. I think that was about a 50-point scalp there. I think it was from 26,230 to about maybe 40-point scalp. Maybe 30, 40-point scalp. Either way, not too bad. Getting the scalps in. That last FOMC was crazy. Must have been 600 points up and down total. Nothing like today. Yeah. Yeah, so we'll see if the market decides to digest a little more. Decides to do anything. Okay, S&P's curling down. S&P's curling down a little bit more than the NASDAQ. So looking at the graph here, here's the S&P. Sellers were able to keep this down below, I guess, 6920. NASDAQ, I guess they successfully kept it below 26,200. So S&P does look like it's curling down a little bit better. We want to see it make a lower low here. At NASDAQ, we would want this to fall on with the S&P, which would be about a 70-point drop from this level. So let's see how it plays out. Gold is also dumping too. Okay, so I'm happy I didn't take the gold long. That's not looking pretty. Okay. Here's 6,900 about to test. So it needs to break through that 6,900 on the S&P. See how this goes, guys. Not too bad. How much you need to make before requesting a payout for Apex 25K? I'm not too sure. 25K. I would think that would be 1500, right? Drawdown plus 100. Yeah, and drawdown's 1500 on 25K, I think, right? Everything is dumping. Well, we'll see if we can make a lower low. It's gonna take a lot of sellers. Well, charts is so much better than Trade-of-8, is it? Yeah, I've never tried it, but I don't really use the Trade-of-8 graph for actually like watching price movements. I just have it up on the stream because it's a lot cleaner. Speaking of clean, we should probably remove that wedge there because it failed below. And this selling channel also failed below. You recently tried it? You liked it so far? How much the cut, by the way? Didn't watch the full news. It was, yeah, 25 basis points. Recently tried it. Better fills as well. Really? It turned. A little bit of a chop up here.
Order filled.
I'll try to continue taking scalps. How far are my stops? I don't have any right now. Like I said, if this grinds up, I'm gonna hold into after hours and see what the market does with earnings. How many points against? Will I consider this as an invalid trade? Probably getting above the above this level here. So I think if it gets above this level, then I think it's bullish. Overall, it's just been a slow sell-off. This was just a big sell-off, then back up to slow grind. So we'll see. Overall, longer time frames is bullish, obviously, but intraday, I would say this is still bearish. Let's see. Wouldn't positive earnings move the price upwards even more? No, not always. A lot of times, actually, when stocks move up a bunch before earnings, even with good earnings, the stocks sell off. Made 5,300, passed the test. Nice, CMA trader. Good stuff. You didn't mess up your consistency rule, did you? Because for the 150Ks, that's over 50%. But if you're trading like a 250K or whatever it is with Apex, I'm not sure what you're trading. But if you passed it, nice job. Good job.
Order filled.
Nice. Got our scalp. Made 1,300 today. 1,500 is the 50%. Oh, you just mistyped. Okay. You didn't make 5,300. You made 1,300. Okay, nice. Not on opposite days. Well, it's not April 1st, so we should be good. So this entire consolidation here, I've been taking scalps, and I've been prioritizing scalps to the short side. So I haven't flipped long or anything here, and I don't really plan to flip long. If the trade invalidates, I'll just close out at a loss. But since this has been consolidating, I've been just taking my short scalps. And gold continues to dump. So who was it? Who was it that was taking gold trades? I think Chauhan was. So Chauhan's price target, 39.55, actually hit. He may have even bottom ticked this initial move here. So not bad on that short. Well done. On the gold. Oh, 53K in total. Gotcha. Let's see if the plunge protection team is kicking in. I guess let's see. So the S&P made a lower low, now bouncing. NASDAQ did not. NASDAQ made a higher low. Okay, what's making this move? So NASDAQ's not making this move. Broadcom is adding a little bit. Meta, okay, Meta's moving up quite severely. Okay, Meta's moving up. Apple's moving up. Amazon's moving up. And Google's moving up, okay. And Microsoft a little bit. Alright, so Nvidia's pretty stagnant, but the rest of those are moving up a bit. And I do like that they're moving up because we'll see if for market on close or the last 10 minutes might give us a little bit of profit taking. Gold's dropping more. Okay. Looks like it's bouncing off 39.40. Tight range so far. Yeah, it's been nice if you're trying to take as many scalps as possible. It's been pretty good for the scalps. Last 10 minutes of the market, there's an injection of liquidity. Let's see what the last 10 minutes do. We got market on close in a couple minutes, in 3 minutes coming up. I took another cash trade, trying to just get like $50 profit on it, but might take a little less. Okay. 18 minutes, 17 minutes until we get some really big earnings. It's gonna be fun and exciting. In a little bit of a breakout signal here. Needs to get below. Turn bullish. Yeah, it does look a little bit bullish. So market on close coming up in 1 minute.
Order filled.
One minute now until we get the markets on close imbalance.
Okay, this could rocket with the imbalance. Be careful if you're on a funded trying to take trades right now. This could short squeeze up very aggressively with the market on close. 30 seconds left.
Ten seconds.
Okay, 5 seconds. Let's see what it does. This may be an aggressive move.
Market on close imbalance. S&P 500 buy side 1.5 billion. NASDAQ 100 buy side 1.2 billion. Dow 30 buy side 940 million.
Wasn't
Mag
as
7
aggressive
buy side
as I expected.
763 million.
That was just like a 30-point move to the upside. Interesting. Wow, sellers really trying to prevent it from rocketing here, it seems. Above here probably squeezes though. Huge volume, but not that big of a move. Okay, 9 minutes left. You see plunge protection team at work? Just watching now and stepping back for the rest of the day. Okay, not bad. Probably better that way. I do like that it's moving to the upside though. Before the earnings. I think that's more potential of a good dip here. Okay, well, we're able to withstand 26,500. Let's see what happens. Thanks, Nicholas. What earnings today? 3 big ones. Meta, Google, and Microsoft. Meta, Google, Microsoft. All of those 3 companies are dropping earnings in 12.5 minutes. We're going to be seeing some massive volume when that drops. Sounds good, Mango. I'll check those out. Had a $71 put on PayPal, sold it while Powell was speaking. 30% on cash account. Nice, Lynette. Hey, you're doing pretty
So just
freaking
keep
well
in
on
mind
the
in 5
options
minutes
trades.
past the top of the hour, we're
Not
expecting
bad.
a slew of corporate earnings to come through on the wires, 3 of which are magnificent.
So many
7
accounts
names.
blown
So
today, it's
big
crazy.
Tech heavyweights reporting
Yeah,
after
for
the
sure.
closing bell today. First off, Microsoft printing Q1 2026
You think we're gonna
earnings,
gap down
estimated
tonight?
EPS
It's
of
possible.
$3.67 and an
I
estimated
don't know.
revenue of $75.55
I kind of
billion.
doubt we'll gap
We also
down
at the same
tonight,
time
but
have
who
Meta
knows?
printing Q3 25 earnings with estimated EPS $6.74, estimated
Evo,
revenue
what's the method for trading the news?
$49.58
I'm just kind of
billion,
trading
and
the
Alphabet
inverse.
printing at the same time as well.
I just think we
Estimated
haven't
EPS
gotten
$2.26
we
with an
haven't gotten
estimated revenue of
any real good
$85.1
pullback
billion. Also expecting earnings
after,
from
you know,
Starbucks
crazy
and
move
eBay
up.
around the same time as well.
No crazy no like real good pullback yet.
So again,
And
the earnings reports that
like I
are
said
slated
before,
are
I
all
think
due to come out at the
think
same time.
everybody's
We'll be
priced in
prioritizing, of course,
everything
the
at
magnificent 7 names with
at
posting onto the
perfection.
feed.
So whenever Jerome Powell, you know, gave a little bit of bad news, we did see the sell-off. It's right back up here though. But everybody was pricing, I guess, 2 rate cuts. Jerome said, no, that's probably a small chance for a December rate cut. So big reaction off of that. But I think the reaction wasn't as drastic as it would have if we wouldn't be having earnings after hours. So I think with these earnings coming out, you know, these 3 large companies, I think we might see bigger volatility than what we just saw with FOMC, depending on how the earnings look. So it might get crazy, but we'll see.
So 10 minutes away now from those aforementioned earnings reports. Microsoft,
Yeah, and
Meta,
gold dropping
Alphabet,
that much, I was
all
surprised by
reporting
that, yeah,
earnings
for sure.
around 5 minutes past the top of the hour. Also expecting earnings from Starbucks.
The
and
gold
eBay as
short
well.
actually would have ended up a really nice trade compared to the NASDAQ. NASDAQ was just big dip and right back up. You remember Netflix a couple days ago? Yeah, true. Yeah, the Netflix trade. And like the funny thing is Netflix actually doesn't have that much weight in the NASDAQ. And we have 3 very largely weighted companies in the NASDAQ reporting on the same day. So that day was just Netflix. This is about to be 3 heavy weighted companies reporting at the same time. So we're going to see some huge movement. Hopefully it's to the downside, at least initially, so we could hit some partials. I would love to see a sweep of this level here, a sweep to at least hit 26K. That's about 250 points down. You got smoked on a QQQ straddle today. Dang. Profit taken at the top. I mean, we'll see. Maybe not. Maybe they have, even though everything's priced for perfection, maybe they have crazy earnings and a bunch of unknown stuff that they release, and then everybody's like, buy, 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 buy right now. Mark, see this will go to 26,400 plus if earnings are beat tonight. Maybe. Maybe, possibly. Bitcoin down over 2K. Maybe all of this has been built in and it drops. I mean, that's my thought process, yeah. Okay, we got last 3 minutes of market open. Let's see if we get some volume in here. Some profit taking before earnings comes out. Can swap it here to the 1 minute so it's a little more exciting. So we can see a little bit more what's going on. $26,450, see an uptrend. Okay. It's definitely possible. If it does break to the upside, like it could definitely short squeeze. It breaks above 300, gets above 325 here for this all-time high. Definitely could short squeeze up another 100 points. Yeah, with these 3 heavy hitters, it's very, very possible. If any of these heavy hitters, if 2 of them, for example, don't do anything and then 1 gaps up, I don't know, gaps up a 5%, or jumps up like 5%, that's going to move the NASDAQ insanely. Broadcom's running here, end of day. Meta's selling off slightly, Apple selling off slightly, Amazon selling off slightly, Oracle same. Tesla pushing a little bit, Google pushing and then selling off just slightly, and Meta pushing here before earnings release. So a bit of mix right here in the final couple minutes on these stocks. "15 seconds till we close. 8, 7, 6, 5, 4, 3, 2, 1. Okay. See moment of truth. 5 minutes till the moment of truth.
So we are
Getting
now
a
on
big
the
squeeze.
closing bell. Brings us 5 minutes away to the earnings reports that we're expecting this evening. Microsoft printing their earnings. Estimated EPS $3.67. Estimated revenue 75.55 billion. Meta estimated EPS $6.74. Estimated revenue $49.58 billion. And Alphabet
Testing
estimated
that
EPS
300 level.
$2.26 and an estimated revenue of $85.1 billion. So again, earnings reports expected in around 5 minutes' time, though it is worth noting these are tentative. They can come out a bit earlier or a bit later. We've got our eyes peeled.
Okay. That just broke all-time highs there. Stopped out a bunch of shorts. Okay, Meta. What was it? Meta, Google. Okay, Google is up. Microsoft is up. Okay, they're all pushing. All three of them are pushing so far. Let's see. Scheduled to release in 3.5 minutes. Okay. You guys see that wick? That was interesting. 30-point wick that just stopped out a bunch of longs, I guess. That was interesting. Yeah, all three of them are kind of pushing up here in after hours.
Early release of Alphabet's earnings. EPS a beat, $2.87, an estimate of $2.26. Revenue a beat at $102.35 billion on estimates of $99.85 billion. So beats on
Beat
headline
there.
EPS and revenue. CapEx a beat, $23.95 billion, an estimate of $22.38 billion.
Which
Revenue
one was that?
ex-TAC, $87.47 billion.
Okay, that was
which is a
Google
beat
beat.
on
Okay.
estimate of $85.11 billion.
Okay.
YouTube
I
ads revenue
wasn't
a beat,
surprised by
$10.26 billion on
Google
estimate
pushing
of
up here on a beat.
$10.03 billion.
That's my
Google ad revenue
I
a beat,
definitely love Google.
$74.18 billion, estimate $72.46 billion.
Meta and Microsoft
Google Cloud
now
revenue
waiting.
$15.16 billion, a beat on estimate of $14.75
Oh, Google
billion.
came right back down.
Google Services revenue $87.05 billion on estimates of $84.67 billion. And Google Search and other revenue also a beat, $56.57 billion on estimates of $54.99 billion. Beats across the board from Alphabet here in post-market trade.
Big moves here, guys.
The shares are up around 3.7% now.
Big moves. Just got one scalp here. It's a huge scalp
Microsoft
too.
earnings coming through now. Revenue that's
Doing
a
a
beat,
100-point scalp on this.
billion on estimates of 75.55
on this volatility.
billion. Intelligent cloud revenue $30.9 billion. Estimates 30.18 billion.
Okay,
Quarterly
Microsoft
cloud
started
revenue,
dumping.
49.1 billion.
Okay, Microsoft dumped. Okay.
Azure and
So
other
Google's
cloud
up,
revenue ex
Microsoft's
Forex plus
dumping.
39%, beat on
Meta
estimates
is
of
pretty
plus
much flat.
37.1%,
So Meta hasn't
and
released
EPS
yet.
$3.72. The estimate was $3.67. That's a beat.
So there we go. Microsoft beat, but it started selling off. This is a 100-point scalp right here on one micro, if it fills.
Microsoft shares
Took it at
fall
350,
4%
taken at
fiscal first quarter earnings
248.
report. Alphabet notes they had double-digit growth across every major business.
Man.
The Gemini app now has over 650 monthly
Google's
active
up
users.
over. Okay, Google's up 6% now. Meta's still flat. And then Microsoft is down about 4%. Crazy.
Forward
That was a
guidance
brutal
for
wick,
Alphabet now.
yeah.
They see their fiscal year capex at 91 to 93 billion. They previously saw about 85 billion, so that's
Let's
a beat
see.
there.
Google's pushing hard. Hey, I'm happy for my long-term Google investing though.
Meta earnings coming through on
Not
the
bad.
wires now.
Okay, Meta's
EPS
coming in.
$1.05 against $6.03 year over year. Revenue is a beat though, 51.24
Okay,
billion
Meta's
on
falling
estimates
now.
of 49.59
Meta's falling.
billion. Family of apps operating income.
Okay, so we got two of the heavy hitters red, one of the heavy hitters green. Let's see if they can outweigh each other, take us to the short side.
Reality
Google's
Labs
pulling
operating
back
loss
slightly.
4.43 billion, estimated loss of $5.16, so a shallower loss than expected. For forward guidance, Meta sees their Q4 revenue about 56 to 59 billion, which is in line with the prior estimate of 57.38 billion.
There we go. We filled our 1 micro 100-point scalp, if you can call it that. 100-point scalp there on a micro. That's funny. Okay. Meta down 5%. Google up 6%, and Microsoft down 4.5%. Let's see. These can kind of rebound, so these can kind of sell off and then bounce up, so we're gonna need the overall move of all three of these to be down, net down. And that Meta candle's huge to the downside. It's not affecting gold at all. Yeah, gold barely even moved. Okay, keep it going, keep it going. 26,200 testing now on the NASDAQ. That just stopped out some longs. Come on down. So Meta fell down to a support level. It's testing 700. So here I'll show you guys. Here's Meta, big old red crayon down. Here's Google, big old green crayon up. And Microsoft bounced a bit. So Meta is... Oh, Meta's failing further. Very nice. Okay. There we go. We've hit our partial. Let's see if we can go further. Not too bad. So far, 380 to 180, I would say. So about a 200-point move here off earnings from the peak. Not bad. Let's see if we can get through this 150 level on the NASDAQ. I'd love to see it. Okay, Meta bouncing, Google pulling back, and Microsoft bouncing a bit. I don't know if I should hold this for much longer. Because those sell-offs on Meta and Microsoft, it could bounce. Already bounced a little bit. Microsoft pulled back a little bit.
So the Mag 7 names are out the way for now then by the looks of it. Meta shares just sliding in spot 7% following their third quarter earnings. They see lower year-over-year Reality Labs revenue in Q4. Quite a lot of forward guidance misses from Meta platforms here. Moving on now to Starbucks, though. Their net revenue, that's a beat at 9.6 billion, an estimate of 9.34 billion. Adjusted EPS a miss, 52 cents on estimates of 55 cents. Comp sales plus 1%. The estimate
Bounced
was
off
negative
previous close.
5%.
Okay.
North American comp sales flat at 0%. Estimate was for negative 0.53%. China comp sales plus 2%. Estimate was for plus 1.6%, so that's a miss. International comp sales plus 3%, a beat on estimate of 1.75%. US comp sales a miss at 0% on estimate of 0.03%. Their fourth quarter comparable transactions plus 1%, a beat on estimate of minus 1.14%, and adjusted operating margin 9.4%, an estimate of 10.2%.
Good day. Thank
Now
you
moving on
for
to
hanging
eBay.
out.
Net
See you all
revenues,
tomorrow.
a beat
Hey,
at
thanks, Into Oil. You
2.82
take care,
billion,
brother.
an estimate of 2.73 billion, and adjusted EPS continued
Bounced off
operations
previous
was
close.
$1.36.
Anyone buying Meta around
a beat on estimate
700?
of
I'm not, no.
$1.34.
I would say it's
Active
pretty fair
buyers a
value,
miss 134 million,
but
an
I'm not
estimate
buying it.
of 135.12 million.
Okay.
For their forward guidance, they see their fiscal year adjusted EPS continued ops at $5.42 to $5.47.
Yeah, I don't know if it'll
Is
be worth
their
it
fourth
to
quarter
hold this
EPS
much longer
continued
here.
operations $1.31 to $1.36. A miss
If
on the
it
prior
breaks
estimate of
150, it
$1.39.
might
eBay
have some
shares slipping
potential,
4%.
but if it holds above this 150 level, probably want to just cut this position. Microsoft and Meta. Meta's sitting at that 700 level. Google pulled off a little bit, rejected off 295. Yeah, I don't know that we'll get much more significant movement. So I think we'll run the outro now. I'll let this sit here for a little bit, but see, I might close it here soon. So let's outro it up, yeah? Outro it up. Guys, not too bad of a day, okay? Not too bad of a day. I mean, overall, look at how today looks. It's basically flat. Huge range though. 380 at the top. 26,050 at the bottom. So just about 330 points of range. If you were able to lock in some points in all of this crazy movement, good job, because you did better than most. And I hope you have a great rest of your day. I appreciate every single one of y'all for joining. All the new subscribers, new viewers, welcome to the stream. I hope to see you around again. And yeah, it was fun. So if you're nice and green and you threw out some good calls in the chat, keep on doing it. Keep it up. Keep it up. Because a day like this was definitely a bit crazy. So if you manage to stay green, you're good. But it sounded like we had some people blowing up accounts. Sounded like we had some people getting in the red today. I hope you learn from today's movements. Maybe stay away from FOMC days, big earnings days. You know, because it happens. We get emotional. Even though a bunch of all kinds of stuff going on, you know, we get emotional and we make bad decisions. That's all right. You know, we learn from them. So if this is a type of day that you cannot trade and you just end up losing, identify it early and get out. And yeah, don't forget the most important thing, where you'll be for eternity after this life has passed away, because we all die at some point. So I hope you figure that out. God bless you guys. Take care. Love y'all. And I'll see you tomorrow in the next New York session. Take care.